up 0.3%, and JSW Steel is another counter which is in the green. Asian Paints almost flat there, but there's some pressure in Adani Ports and Adani Enterprises as well. Geo Finance, Tata Motors, Shriram Finance are some counters in the red. Trent has turned to the red side of things and it's down 1.6%. There is pressure in Grasim, Bajaj Finserv, Indusand as well as Reliance, BEL, HUL, M&M, all down by about 1 to 1.5%. Let's also try to pull up the advanced decline ratio and see how that has fared throughout the day. There you go, the gap has widened, and how there's around 478 odd advances versus that of 1800 odd decline. So the ratio is more than 4:1
yes.
today. Let's also try to quickly pull up the sectoral heat map and see what sectors are doing. All sectors in the red. Maximum pressure seen in the defense part, down by about 1.7%. Oil and gas also down by about 1.3%. Nifty Realty also down by about 1.2%. And also, Harsh, as you were mentioning, keeping expiry also in mind, and plus, what are the broader markets looking like?
Well, yeah. So if we pull up the Nifty daily chart, the Nifty mid cap is down 1%, but just for a minute, if you can pull up the Nifty 50 chart for the day, intraday, and some part of this move, of course, would likely be expiry to a certain extent. But at least the start of the day, we saw quite a measured response from the index. So that's the one key positive. But currently 0.7% lower, just off the day's lows. Let's pull up the mid-cap index one more time, nearly 1% lower on the mid-cap index. The small-cap index too, seeing some bit of pressure. So the broader markets is where pressure has built up, 1.2% lower more on the Nifty small-cap. And it's been a tough week already for broader markets. So on the back of that, to see another percent shaved off is obviously difficult for those holding stocks within this space. Now, in terms of the sectors as well, of course, defense was one. But when you're looking at the pressure across the board, we have infra companies under pressure, realty, energy, even PSU, banks and metals are down 1% each. So you're seeing pressure across the board. And realty, of course, within the broader markets, one of those names or one of those sectors which only focuses, or all of the constituents of which are part of broader markets, pressure is evident. But Neeraj, your observations?
Well, observations is one, but the point being, there are some points that I definitely want to make. So a lot of combination, a lot of, commentary around whether this is going to be really bad or no. Now, very likely could be, but I thought about it. The only other country which has got this 50% tariff is Brazil, right? It's the other victim of the Trump tariff issues. And Brazilian real is still up nearly 13% against the greenback this year, which is against the dollar. And the Brazilian index, which is Bovespa, is up about 11% YTD. So you would ask that even though there's such high tariffs, those indices have done well. Well, the truth is that since July 9th announcement of the 50% tariff, Bovespa has underperformed the S&P 500 by about 3.4 or 3.5 percentage points, and the Brazilian real is flat versus the USD. Now, the question that you ask is this such a bad outcome for a country which was spoken about since July 9th with a 50% tariff? Maybe not. So what should the near-term strategy be for anybody? I think it's not incorrect to buy the markets 5% higher, but when the trend restarts, so why go out and buy right now? Might as well wait for the trend to restart. It could do it anytime, by the way, but might as well buy it when it's high or starting to trend higher. Remember, periods of dislocation, as could happen to some textile names, that could happen to some auto ancillary names, can create some very compelling entry points. And same way, if you think of which are the pockets that will be hit by dislocation, I think the most impacted stocks according to MK, right? Textiles is Gokaldas and Kitex, and we'll be speaking to Kitex soon. Chemicals, Camlin, Aarti, Atul, according to them. Auto ancillaries, Bharat Forge, Suprajit, Sona, BLW, all of these have sizable US exposure, and therefore that is something to watch out for. MK also believes that cutting Russian crude imports may hurt Reliance and OMCs and risk crude price spike. And the pharma and the EMS pocket is exempt for now, but any potential Apple announcement of not doing too much in India might impact the sentiment of the EMS stocks. So that is to be kept in mind. With all of this, in mind, let's get in Kush Bora in the conversation to try and understand what to do in a scenario like this. Kush, we started off reasonably okay. Good afternoon to you. But we have come off and now trading circa the low point of the day. Now, is the risk reward stacked against going short at these levels?
Hi, Neeraj. First, a very good afternoon to you and to the viewers. Indeed it is. Indeed it is. And I don't think I could have summarized it any better. I was just listening to your commentary. And my view is exactly that, sometimes inaction is also good action. You don't have to act or react every time something happens in the market, particularly untoward, right? So this is that time where, your patience is tested. You might as well sit this out because, as you rightly said, and as I have been saying for the last couple of sessions, the risk reward ratio, despite the market trending lower, is not favorable for a fresh short position. Now, right now, Nifty is at a 3-month low, but we know that a couple of indicators suggested that the Nifty on the downward move is overstretched. There could be just one piece of news that could trigger a sharp short covering rally, and you might get caught on the wrong foot. So yes, the only two trades that I could suggest is one, sit out. The other is play for a rebound as and when it occurs. Don't preempt it, but as and when you see some sort of a rebound, you could perhaps cash in for a quick trade. The next immediate and a strong support for the Nifty now is at 24,000, 24,050, which is the 200-day moving average. Whether it tests or not remains to be seen. But even if that were to happen, I would assume that there would be a couple of rebound sessions, and you might get an opportunity to make that rebound trade before hitting that 200-day moving average, if at all we do.
And Kush, what about your top picks for the day? Are they buys?
Still going with buys. The reason being, as I said, you can't short index at this level for sure. You can't short stocks at these levels because a lot of them are into already deep oversold territories. So yes, I've got two calls, both of them on the long side, and both of them are fairly domestic plays. One of them is JK Cement. We discussed this yesterday as well. In a market like this, the stock is holding ground, in fact, gaining some. And yes, the volumes are also fairly decent. Nothing extraordinary, but fairly decent. And I'll take that. So continuation of that call, 7070, 7200 targets maintained, 6790 is where you place that stop loss. The second one is Thyrocare. And we're starting to see some sort of traction in some of these names, be it Vijaya, be it Dr. Lalpat, be it Thyrocare, some sort of traction. So there is very clear accumulation in the space. Maybe once the markets settle, you might see a sharp rebound in some of these names. So today we've picked Thyrocare, Vijaya we'd already mentioned some time ago. 1375, 1405, those are your targets. 1315 is where you place that stop loss. So yeah, still going with both long calls.
Okay, Kush. We are seeing a bit of a recovery as we speak with regard to the index itself. But really, one sector which has really bounced back is the Nifty IT, Kush. What is the trend you're seeing there?
Harsh, I would largely, account that as more of a short covering bounce. You name any large cap stock, in fact, in some cases, even some of these mid cap stocks, they had gone into oversold territories, and you're seeing a rebound on those lines. Now, is this something that you buy into? Not really, because this is that short covering bounce which has not really sustained in the near, in the recent past as well, and could well give way. So, why do you want to take a risk in a sector which wasn't doing well, and a short covering bounce could also be sold into? So while yes, it's a positive that Nifty IT is showing some signs of holding up. So if I look at the index, it's showing a positive divergence on the daily setup, which is a very positive thing. But right now, the confidence isn't there to go out and buy. And as again alluding to something that Neeraj said, once you have a clarity in terms of the price action that the trend is for sure here to stay, that's when you perhaps go out and buy. Right now, IT is not into that space, although green shoots appear. Yes.
Kush, your take on a hero top gainer on the Nifty 50 today?
Splendid. In fact, I think this entire pack is starting to show a lot of traction. Excellent accumulation in some of these names. Even TVS Motor, if you see the recovery on this one from those support levels of about 2750 has been excellent. So yes, I think there is a lot of traction and interest that is coming back to the entire two-wheeler space. I would actually be a buyer in Hero, TVS Motor, both of these names, despite the kind of run that it's already had. So yes, if you have a position, for sure continue to hold. If not, you could still build some. And on the upside, targets of 4,800, even 5,000, very much likely on a Hero Moto coming out of a 3-month consolidation. So yes, very positive on the pack, particularly Hero and TVS. For Hero, your stop loss could be close to the 4450, 4500 mark.
Trend, Kush, it started in green, but right now is under pressure on 1.6% down. What are the charts indicating?
So, Mahima, see, this is exactly my concern. And if I can just, correlate this with the IT move, even something like a trend, which was, fairly heavily shorted, rebounded on the back of maybe mild volumes from oversold territories, but did not sustain and has given way from those resistance levels of 5450. Now, if some of these levels are taken out on the way up, that's when you're relatively sure of the trend and the bottom being in place. Not the case with most of the IT stocks as we discussed, and even trend for that matter. So I will wait. I am okay to let go of the initial gains. So 54.50. If that level is taken out, we're able to sustain above that. Maybe that's when you consider. For now, this is more of a dead cat recovery, short covering sort of a bounce that you're seeing in trend.
Okay, Kuch, one quick thought on the textile companies. We have a textile conversation coming up, but they were in vogue, maybe for the right reasons, currently being punished, again maybe for the right reasons. From a trader's perspective, how do the textile stocks look?
So, Neeraj, I would make that trade again, on similar lines. Not right now. I would let the dust settle because a lot of these names have gone, deeply into oversold territories, and any kind of positive news and price action would actually spark, a sharp rally on some of these names. So Gokuldas, Kitek, some of these names could actually see a very sharp uptick. So, I'm actually looking at some of these names very constructively. It's just that I want the price action to stop falling first and then maybe start showing uptick. So maybe some of these could fall, in the buying category in the coming days.
Okay, Kush, stay on because it's an important conversation to have. What could happen to textile exporters? Mr. R.K. Vij, President Emeritus of the Textile Association of India, joins in a moment. We'll also get in Sabu Jacob of Kitek's Garments. But Mr. Vij, thank you so much for joining in. Now, first, what is your sense? I mean, will Indian exporters tide through this big hump, or there needs to be some resolution or some support or a combination of both that needs to happen?
Actually, in last 1 week, there is a Trump G is changing on and off on the tariff now, because earlier our tariff was about only 5% higher than the other countries, Bangladesh and other things. So we expected that our Indian government will support us with the 5%, but now the difference has gone up by, now our is 50% and there is 20%, by 30% it has gone up. So it's difficult. Suppose if we'll try our level best, we cannot match this 50%. So our textile industry is still thinking, because around $8 to $9 billion of garment, carpet, home textiles we are exporting. Over the total our textile trade export is about 40 billion. Out of that, 9 to 10 billion is going to USA. So at present, with this 50% tariff, it is very difficult to export to USA. That is sure. And uncertainty is there. Of course, we are also thinking this 50% will not remain, because they are on the 27th, the team is coming. But as on today, we are not sure what will happen and where we will have to export our products. The buyers of USA, they are also not keen to buy, but I think some solution will come down.
Okay. So, but let's assume that we don't have a resolution for now, Mr. Vij. We don't know when it will come through as well. I mean, are there other countries where the exports could help? I mean, what is it that can be done? Could there other countries or other markets open up? Can the Indian government give some support which could help as well? What are the options?
No, I'm just telling you this. We have a very strong domestic market is also 8 to 9 billion domestic market to consume. Of course, it will take 2 to 3 months. But another we have the world over another market with the recent this FTA with USA and with Europe. It's going on. So we will get the market and we will change our products for according to them. But now the government should make as earliest as possible the FTA with the Europe. Europe is also a very big market, so which we are aiming, and we can supply also. And the government should give us some support. They should give us 5 to 6%, not more than that. We don't expect 30% from them, but 5 to 6, 7% they should give some export benefit to other countries also, including if USA, to all countries, so that we can overcome this problem. And another thing, we have a very big market, so government should make some, because here cotton we are getting, cotton is we are importing PTA MEG for MM fiber we are importing. The duty of cotton is at present 10%,
Right.
custom duty. And on PTA MEG it is 5%. So government can take a decision so that our raw material should be cheaper.
Got it.
So then we can compete.
Got it, Mr. Vij. We're also joined by Sabu M. Jacob, Managing Director of Kitex Garments, joining us now. Mr. Jacob, hi, good afternoon to you and welcome to NDTV Profit. It seems that we have technical issues with him. His call seems to have dropped. But okay, Mr. Vij, sticking to that conversation, lots happening in the textile space. First thing, of course, US tariffs. But on the other side, on the flip side, we have the UK FTA, which could benefit the entire textile space. There are targets that the government has set for textile exports from India to different nations by 2030. Just want to get a sense that if tariffs are not beneficial, let's say in the case of US, do you think that UK FTA, which was a huge success, could offset to some extent when it comes to textile exports from India?
Yeah, UK is very much benefit because all the duties to UK tariff is zero. So we are opening a very big market for UK, and I don't think we will. This is the time being. So, and ma'am, textile, of course, the profit margin in the textile are very, very less as compared to other products. We are very strong, and we are not going to, we will solve this problem and we'll immediately find out other market. For the time being, 1 or 2 months, we want a government should support for the local market as well for UK, and immediately government should start negotiating for the Europe market also. Europe is a very big market, and we sure will get whatever the $6 to $7 billion. Of course, $9 billion is we are exporting. It will not become a zero, but $4 or $5 billion part of we will consume in India, and part of we will find out other market of the world. So I think within 2-3 months this will be over. And moreover, ma'am, this Ukraine war from the last 3.5 years is going on. It will come to an end, and then I think this problem will be solved and we will be on the normal track again.
Okay, Mr. Vij, thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit. Now we, also had a conversation with Raja Shanmugam's former president of Tirupur's Textile Exports Association, and Shalin Toshinwala, Vice Chairman at Synthetic and Rayon Textile Export Promotion Council, on what will be the impact of tariffs on the garment sector. Listening to what they had to say.
To swiftly invoke the support of some the incentive tools, what is there already, what is there that has to be enhanced at least for the ongoing programs towards US. So then the later days they can negotiate and get it settled. So till then we have to invoke whatever the possible tools available with India to safeguard the interest and existence of the micro and small industries of these segments.
Export to the world market for Indian textiles is worth $35 billion. Now, the US alone is about $10 billion worth of that, so almost a third of our overall export. And within that, apparel and made-ups is about $8 billion combined. Now, as far as apparel goes, there is a very clear danger that there will be quick replacement to different destinations. And as far as made-ups go, we have a very sizable share within the United States. It's going to be harder to replace it quickly, but of course there will be a slowdown, and there will, if things don't normalize, there will be replacement pretty quick.
Okay, so that's with regard to textiles. Not seeing a major reaction on most of the textile players, Mahima. In that sense, we're seeing a very mature reaction from the market, regardless of what Mr. Vij was saying, which could be quite a heavy price for the textile sector. Despite that, we're not seeing that kind of reaction. So it seems, is the market really discounting some part of this?
Maybe some bit of damage has already happened. In the sentiment, there's no benefit that came in after the UK FTA move as well. So I think the stocks have largely been quiet after that initial hurrah, right? So maybe that's what's playing on the mind. But clearly they are a loser. I mean, you can't really doubt it. But yeah, I think market-wide there's been a bit of a pullback. Maybe that is also helping the current mood right now.
Yeah, possibly that. Okay, before we slip into a break, India's IPO market remains lively. Several offerings lined up this month. One notable IPO opening is JSW Cement, and that's of course led by Sajjan Jindal, aiming to raise around 3,600 crore through a mix of fresh issuance and offer for sale. My colleague Sajid spoke with the management. Let's hear Parth Jindal's perspective.
Parth, your IPO is coming on 11th. Can you take us through the entire proceeds which you're going to raise? It's the 3,600 crore IPO, and I think the second one in the last couple of years after JSW Infra, which came out with an IPO. How are you going to use the proceeds?
Sure. So the IPO opens on the 7th and closes on the 11th. And like you rightly said, we're raising 3,600 crores. 2,000 crores is an offer for sale where the private equity investors in JSW Cement, Apollo, Synergy Capital as well as State Bank of India would be partially offloading their stake. And the 1,600 crores is getting infused into the business as primary. We've disclosed that about 520 crores of that is going for debt repayment. About 800 crores of that is going towards building our integrated unit in North India at Nagaur in Rajasthan. And the balance is being used for general corporate purposes. So the purpose of this IPO is really to enter the North Indian market as well as to become a pan-India cement player. And this is the first step in our journey from 20 million tons where we are today to 42 million tons, which we would like to get to over the next 3 to 5 years.
Do you see this IPO being also an exit for some of the investors who came in 2021? Because your valuations have more than doubled since the time they came in. I think, if I'm not wrong, 1,600 crores for 19%, and now we are looking at 19,500 crores for the upper band which is there. So is that also one of the reasons?
Yeah, so the upper band is at 20,040 crores, and you're right. They came in at a lower valuation, and they would be partially exiting, but they will still retain about 7% of the company even after the IPO. So yes, every fund has its strategy. So I'm sure they are looking at they are partially exiting, and partially they would remain in the business. And they came in at a very timely time for JSW Cement. That 1,600 crores that they invested in 2021 has really allowed us to expand and become the 20.6 million ton company that we are today. So we'll always remain grateful for their participation, because without the capital that they provided in 2021, we would not be where we are today.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Right, back with India market close right here on NDTV Profit, and the reason I'm laughing is because the market mood is very fickle right now. We recovered a bit of lost ground, which is good news, but I don't think portfolios would have made money, which is what I think we were laughing about, that not too many people are making money, even though, I mean, everybody's being a watcher of the markets right now. But Kush Bora, you spoke about IT and that bit of a green on the screen. Just wondering, you gave a view on that earlier, but considering it's trading circa the high point of the day or around that, I mean, is there a trade to be taken for the last 1 hour on IT?
Neeraj, gun to my head, which I know you'll never put, but a gun to my head. I mean, you could still consider, a sharp short covering trade on some of these names. I don't call it a positional trade because, as I said, some of the key levels need to be taken out before, and a confident move comes in some of these names. But otherwise, yeah, I mean, if you're playing for that short covering quick trade, then couple of names. I think TCS is one stock which is now starting to show some positive divergence, some sort of an upswing. So maybe with the stop loss around the 2950 mark, you could play for another 200 to about 350 points of upside. Persistent has stemmed its fall. It's starting to see some sort of rebound on occasional days. Volumes again, nothing to write home about, but they're still a steady holding ground. So yes, I mean for a stop loss around the 5050 mark, again for a uptick of about 150 to 300 points. So some of these trades as a short covering play, purely a rebound from oversold territories, yes, but that doesn't still change my view that IT is still a sector that you'd want to perhaps put it on wait and watch list rather than take a big positional bet.
Okay, Okay, Kush, stay on. It's that time of the show wherein we get you what dealing rooms are saying. What is the chatter from across the dealing rooms in the country? Some would have dialed maybe 3, maybe 5, maybe 10 phones, or maybe more. Sorry, if you do more. but I'm guessing it's a lot of hard work through the day, which gets you to this final list of 4 or 5 names, right? What's that list looking like today?
Firstly, it's HDFC Bank, and dealers are saying that there are some sell flows that they're seeing at higher levels on anticipation of some negative corporate development that could come in for HDFC Bank. So keep an eye out for that counter. Titan is another counter where there are sell flows on large HNI desk on anticipation of weak Q1 numbers, and the weakness could be on the margin side is what dealers are indicating. For Trent, dealers are indicating that despite the strong financial performance, there are sell flows at higher levels on institutional desk. Both domestic and foreign institutions have been seller in this counter, and valuation is one of the concerns that they have pointed out. For Paytm, there are buy flows on institutional desk at lower levels, and dealers expecting some positive corporate development. And hence you can see, despite the weakness in the market, Paytm is one stock that has gained around 1.5% in trade. PVR Inox is another counter where multiple dealing rooms are suggesting a tactical buy trade to their clients. This counter, that's PVR Inox. And lastly, it's Manappuram Finance, where dealers are indicating that there are fresh buy flows at lower levels, as Street believes that all the negatives are largely priced in now for Manappuram Finance.
So all negatives are priced in. So are people saying that they would want to go out and buy into Manappuram Finance at the current valuation?
Well, yes, that is what the indication is coming in, and also there is some indication that even though the numbers are expected to be on the weaker side, given the fact that Asirvad, which is one of the subsidiaries of the company, reported a weak set of numbers, there would be buyers for Manappuram even at fall. So keep an eye out for that counter.
Okay. Now, Somit, thank you so much for that. And I urge my producers to keep these graphics on as I ask Kush Bora about some of these stocks that Somit has brought out. So on 2 of those names, Kush Bora, HDFC Bank, where there are some sell flows from that what dealing rooms are saying, and on Manappuram Finance, where they believe that the negatives are priced in. Can you talk about both of these?
Love to. In fact, quite intrigued by this, piece of news that, or rather, the dealing room check that Somit has shared on HDFC Bank in particular. My views constructive on HDFC Bank continues to remain so. But now since he's mentioned it, I'd perhaps watch it a little more closely. 1950 is that support zone, and maybe a little further down 1925. So 1925, 1950, that's the support zone for me. As long as that is held, I don't think HDFC Bank structure is going to weaken. Perhaps, in fact, I would look to buy, around those levels. So HDFC Bank, I still remain constructive. But as I said, now that Somit's mentioned it, I would actually keep it on my radar. The second one was Manappuram, right, Neeraj?
Yes, it was Manappuram.
Yeah, here the structure is not actually very exciting. The resistance is near the 263, 265 zone. So for me, that needs to be taken out before any kind of meaningful long positions need to be created on this. So yeah, not too constructive on Manappuram just yet, but I do like a couple of shares that he has already mentioned. PVR seems to be turning a corner, and 197 on dips remains a buy. So yeah, among the pack, if I were to pick just one, I think it would be 197 communications Paytm. That still looks fairly strong despite the kind of decline it's seen in the last couple of sessions.
Thank you for those views, Kush. We're also joined by Aditya Shah, founder of Hercules Advisors, joining us now. Aditya, hi, good afternoon to you. I'll take up one of the stocks that Somit was just talking about, that is Titan. We're expecting the earnings today, and as he rightly pointed out, the earnings will be weak on the margin front especially, and this is because of their studded ratio not going up in the past 2 to 3 odd quarters. What is your understanding with respect to how the business update came in, of course, and how do you expect Titan to come out with its earnings?
I expect very muted set of numbers. Given the valuation at which Titan really trades at, I don't think that the number would be great or cheer or will be cheer about the first week. Of course, I think that the revenue growth would be in the region of 10 to 20%, and then from there on, if margins continue to be deteriorate, profitability could get it. From my perspective, Titan is a great company, but the valuation is crazy enough that I would not tend to look at this stock. In fact, valuations across the entire sector, be it Kalyan Metals, be it Sky Gold, or be it PNG Garden, all of them are trading at a very crazy level of valuation. Volume growth is muted. The revenues are getting inflated because the gold prices continue to keep moving up. As gold prices continue to keep moving up, revenues keep moving up as well as percentage of the revenue that also keep moving. So from my perspective, growth with respect to prices is there. Volume growth for many of these companies is really very limited. From my perspective, valuation is crazy. A good company, but I tend to avoid that company at this stage.
Okay, all right, so that's with regards to where Titan stands, but it's time for our stock of the day segment, and the stock that we're putting spotlight on today is Fortis Healthcare, which is buzzing on the back of its earnings, and it's beaten analyst estimates, and we have Varsha joining us with more details on Fortis. Varsha, what are you picking up?
Right, thank you so much for that. Yes, good set of numbers, beaten estimates when it comes to your EBITDA, your revenue, and even net profit as well. The revenue growth that you're seeing is led by higher RPOP, that is average revenue per occupied bed, and 7.8% increase in occupied beds. Now, the international patient, if you see, it grew 21%. Now, international patients contributes almost 7.9% to the overall revenue. Onto occupancy, if you see, the occupancy stood at 69% versus 67% last year. So the uptick there, and management is expecting 70 to 71% of occupancy level when it comes to the whole year, that is FY26. Diagnostic business, if you see, grew 7.4%, and over here the next leg of growth for the company would be diagnostic business growth, where they are expecting almost 12 to 13% of growth when it comes to this segment. Let's see what management vision is, because we earlier spoke to the MD of Fortis Healthcare, Dr. Raghuvanshi, and what he has to say that the consolidated revenue is expected at mid-teens growth in FY26, and the hospital business, if you see, is projected to grow at 12 to 14%. Now, of course, this will be led by the capex that the company is doing, but the diagnostic business, as I was informing, it is expected to grow 12 to 14%. So 7.8% of growth this quarter to overall 12 to 14% of growth in FY26 is a huge uptick that the diagnostic business will be seen because of the brand that the Fortis has been building on. They are anticipating a slight moderation when it comes to RPOP, that is average revenue per occupied bed growth, but they're planning to add 900 bed capacity when it comes to FY26, and overall, if you see, a lot of hospitals are actually playing on capex. The next leg of growth for all the hospitals would be to go to capex capacity addition through brownfield project, and which will lead to higher ratios and higher margin, and Fortis is also leading when it comes to brownfield expansion. Lastly, if you see, the EBITDA margin is expected to increase by 2 to 3%. So a huge uptick there, and huge uptick when it comes to diagnostic business will actually lead to the growth that the Fortis is eyeing on when it comes to FY26 and 27. Lastly, on the analyst recommendation, if I were to talk about, there are 15 buy calls, 0 hold call, and 1 sell call, but the upside potential would be almost negative 7%.
Well, it's been a very, very solid performance from healthcare as a segment, and in terms of returns given to shareholders. Curious. Thank you so much for that, Varsha. But curious to know, Aditya, can that kind of outperformance that healthcare as a sector has given in 2024 calendar year, can it sustain, or are we just losing some of the shine there?
Very surprising that everybody has a buy call, but their targets are minus 7%. Very interesting. From my perspective, the company has performed well. Fortis' results are really very good. But again, I am seeing a hospital stock trading at about 60 to 70 times multiple. Now, I don't think, given the 15 to 20% growth that the company will clock off, I don't think that kind of a valuation is justified. Point number one. Yes, healthcare will continue to do exceptionally well. Healthcare is a broad range of spectrum. There are so many subsectors within the healthcare space. There's a CDMO space which is doing exceptionally well. There's an API space where companies like Laurus have also done exceptionally well. So it is a broad range. A lot of healthcare performance will also depend on how the US exports are treated going forward if there are tariffs. expect a little bit of slowdown in the near term, which could affect stock prices trading at a very high valuation. They could see some bit of price correction as well as time correction. And once that really happens, you will see a good opportunity. For example, on TV's call yesterday, TV was very, very cautious on their export market. 88% of TV's business comes from the export market. And if there is a tariff in the US, it could hit companies like DBs, also for that matter, companies like Doris, Syngene, all of those companies. So I think 2025 will be an opportunity to invest in the pharma sector. The returns may not be great in 2025. Returns will return back when there's clarity with respect to tariffs, which could come by the end of this year.
Okay. Kush, your quick view on the charts for Fortis Healthcare. If one wants to go ahead and buy today, is that the right levels to enter, or should he wait?
So, Mahima, about 10 sessions ago, we'd recommended Fortis on the channel itself around 855, 860 zones, for targets of 885 and then subsequent targets of 905, and that was 2 sessions ago. Today's high is 904.5. So I think that near-term trade is done and dusted. If you had a position, you're better off taking profits home. Now, the stock is in a very, very strong, medium to a long-term uptrend, and nothing that has happened today, at least in terms of price action, has changed that. In fact, it's only reinforced that view. But if you want to add, my suggestion would be do it on dips. Any level close to the 850 to about 865 zone, that should be taken as an opportunity to accumulate further from a positional standpoint. And from there on, your stop losses are 830, 835, around that level. But accumulate close to the 850, 860 zone. Hold on for some more time. I think the stock is in a good uptrend. Once the market settles, this stock's outperformance will just keep on continuing.
Okay. All right. So that's with regards to where Fortis Healthcare stands. But the top Nifty gainer today, that's Hero MotoCorp, and Q1 earnings con call highlighted a mixed start to the quarter with easing demand, stable finance penetration, and gains in scooter and EV market. To discuss as to what are the key takeaways from the con call, we have Puneet joining us to give us more details. Puneet, what are you picking up?
Well, thank you for that. So definitely it was a weak quarter. In 10% sales fell in this particular one, but the June sales led to a 20% rise compared to the same time last year, and the street is continuing with that momentum as well. So in this particular year, in this particular con call, actually they didn't mention the start of the quarter was much stronger in quarter one, but because of industry demand as well as other factors, it did soften by the end of the quarter in May as well as in June. And we've seen just a tinge of revival essentially in the month of July, but it is on a low base. So that is, supposed to be considered. They did mention a very interesting trend, which is opposing to what all the two-wheeler makers are saying, that the rural growth is actually slower than the urban growth for Hero MotoCorp specifically, at least over the last 2 months. That trend is reversed according to them. So they are actually seeing the urban markets come back faster compared to the rural markets in June as well as July. And it could be very interesting because it's a very contrary trend compared to what Bajaj as well as TVS has said in their con call. So that's one. The second key aspect is finance penetration. It did go down in quarter one. The company mentioned that's largely because of some specific issues that they were facing in their financing arm as well. But now the trend seems to have reversed and is better at around 65,000, which is the normal level as well. The third key highlight, they mentioned that they are looking for a new forthcoming launch in the 125cc segment. It's very interesting because Bajaj also yesterday in their con call said that they are looking for a more affordable 125cc segment launch, which will be a non-sporty variant. So it is to address a larger market which competes with the likes of Honda Shine as well. So that is a very key. All players going after the non-sporty segment now in the 125cc. The fourth key trend is scooter sales market share now at 9.4%. It was almost negligible in the same time last year, as well as the EV market share is now 7% for the company, moved up to 10% in July as well. So a key positive. And finally, on PLI certification, the Vita V2 has already got PLI certification. That should boost margins. They're also applying the other models like the VX2 going forward as well. So it's largely that the commentary is driving the positive momentum, and valuations are definitely in favor for investors compared to the other peers.
Puneet, what should one make of the trend with regard to some of the base models of Hero as well as a Bajaj Auto not doing as well, but on the premium side of things, and Neeraj and me were discussing earlier today, on the premium side of things, things are looking much better. What do you make of that?
Well, definitely. So the premiumization and the scooterization trend seems to be quite vigilant, and that is doing very well for TVS because they have both these segments. For Eicher, they have premiumization, so that is doing very well as well. The entry level has definitely taken a hit, and that's visible both for Hero as well as Bajaj Auto. So they will have to do some model launches, and I think the new launches in the 125cc segment, in the non-sporty segment which I mentioned, scooters for Hero have been doing very well compared to Bajaj. TVS, so someone like a Hero actually does have scooters in petrol and diesel. So those two trends are a clear indication that the 125cc segment could be the new 100cc segment going forward, and all the players are focusing on that pie, because with the ABS coming in 2026, the cost will go up and the people will start to migrate and go into the 125cc segment first rather than 100cc now.
Okay, thanks for that, Puneet. Aditya, just sorry, but very quick view with regard to a Hero and everything that's playing out in this space.
In the two-wheeler space, I'm positive on Hero. The valuations for Hero are looking really very good. And as the management is guiding, growth will become slowly and steady. From my perspective, I am positive on Hero, positive on Bajaj, and positive on Eicher for that matter as well. Slowly and steadily, as growth continues to pick up, given the upgraded valuations of Hero Motocorp, the stock price will continue to do well as the growth continues to pick up. I think TVS Motor has been a standout performer and continues to do exceptionally well in this. But the valuations for TVS Motor are really very expensive at this stage. So Hero Motocorp is a favorite zone.
Okay, all right. Shifting focus to the IT space and talking about Datamatics, which came out with its Q1 earnings. Overall revenue was down around 6%, EBIT up 3%. Margins have improved to 12.1% and net profit up 12%. And to discuss as to how the quarter has gone by, we're joined by Rahul Kanodia, who's the Vice Chairman and CEO at Datamatics, joining us now. Rahul, hi, good afternoon to you, and thank you so much for coming to NDTV Profit. My first question to you is that revenue has seen a slight dip, but both your margins and PAT has, grown. Just trying to understand as to what's worked for this quarter and what's led to this kind of margin increase.
Yeah, so we do have a seasonal spike in Q4, and therefore Q1 is always a little depressed for Datamatics compared to Q4. So that's a normal business cycle that we have. The margins have improved because we've been taking a lot of optimization and cost cutting, and that's beginning to show the results. So we had taken that initiative in Q4 of last year, and therefore Q1, you're seeing those results.
Okay. In terms of, the kind of the investment that you're doing in AI, from what my reading is, you invest around 40 to 50 odd crores every year when it comes to your technology development with regards to where AI stands. Is there a change there? Because competition is picking up in the space. Do you think that you will be able to invest more and maybe get more technology in place? Is that something that you're aiming at, or will that be in the same range of 40 to 50 odd crores?
Yeah, we have the capacity to invest more, although right now we're not planning to invest more because the current investments need to see a return. So we are doing a very specific customer-centric investments, because that will give you a better ROI rather than a general purpose investment in these solutions. So right now there is no plan to increase the investment. However, yes, of course, we have the capacity to invest more. And if there's a need, depending on the situation, we will increase our investments.
Got it, Mr. Kanodia. This is Harsh joining in as well. Give us a perspective on where you see the business go in FY26 in particular, which is in the near term, in terms of both top line growths as well as where margins go. And then give us a slightly longer term lens, maybe 2 to 3 years. How should one look at the business of Datamatics? Things are fast changing, so give us that perspective first.
Yeah, things are changing very rapidly. In the near term for this year, we are looking at mid-single digits organic growth. The reason is that right now you have this tariff wars going on and there's a lot of uncertainty. We see many customers going slow on the decision making. The pipeline is healthy, but nevertheless the decision making is slow, and therefore one has to be a little conservative. On a longer term perspective, 2 to 3 years, I think there'll be a huge disruption in the industry because of AI. And therefore, there's a great opportunity for companies that are taking the lead on AI to capture opportunities for automation and AI-based re-engineering and transformation. Datamatics is fortunately very well placed. We've had an early start. We work very closely with some OEMs like Microsoft and Google. And with that partnership, we have an edge when it comes to the market. So fortunately, because we have a good edge and an early start, I think we are very well placed to capture that opportunity. So 2 to 3 years looks very promising. This year, because of the tariff wars, one is a little skeptical because customers are slowing down their decision making.
And no commentary as of now, Mr. Kanodia, I believe, on when does that change, right? That uncertainty remains, customer commentary.
Yeah, that remains for now. At least I see for the next 6 months, I don't see any major change. That turmoil will continue.
Got it. The model that you've built, you spoke a bit about benefiting from AI as well, I presume on multiple counts as well. Does that enable you at a higher base to reenact the 5-year CAGR numbers that you've spoken about in your presentations?
It will. Right now, we started seeing a commercial deployment of the pilots that we were doing. So some of the projects are going live, and that's very reassuring. We are deploying AI across all the 3 digital technologies, digital experience, and digital operations. So all 3, we are doing that. Once they see the light of the day, hopefully in the next quarter or maybe at best 2, then I think we'll be in a good place to talk about the benefits. But we're seeing very good traction. And some of the new wins that we are getting are on the back of the AI solutions that we are able to demonstrate to customers.
Sorry, so the crux of my question, Mr. Kanodia, excuse me, was that you mentioned how you've had a very impressive 5-year journey, CAGR, right, after NCI on the PAT and the revenue front. It's high double digits, not something that too many companies have done. Do you reckon you can reenact this story for the next 5 years?
Answer is yes. This year may be a little soft, but the next 5 years, answer is yes. We will probably maintain that.
And Mr. Kanodia, in that journey, there's also been some bit of client concentration. So there's been clustering of revenue. Do we expect that to continue? What I'm trying to get to is, are existing clients going to be the prime focus area, or are we penetrating deeper into newer clients, and are those opportunities really opening up for you?
Yeah, no, we will do both. We are putting a lot of emphasis on penetrating existing clients. That's very important because you have a good relationship, a good base, and all our accounts are marquee logos that are very mineable. So certainly we will maintain that. Having said that, we are getting some good traction with new logos on the back of some of the AI solutions. So it's both of them, but probably a little heavier emphasis on mining existing relationship. And there's a lot of headroom for growth there.
All right, Mr. Kanodia, thank you so much for joining. We'll let you go on that note. So that's, of course, Datamatics Global. Stock perked up on the back of the numbers of Q1. Seasonally weaker generally, and which is why the market's completely brushed off that degrowth number that we've seen QOQ. Aditya Shah, while some of the larger IT names aren't showing enough zing in terms of growth, and it's been a while since we saw absolutely any kind of growth from them, are some of the smaller names on your radar, or would you find them too expensive? Rationalize that for us.
From a valuation perspective, the entire package is good. But then that's how it is. The market has derated them and does not derate them even when the growth is slowed down. So from a big cap IT perspective, something the ER&D space, ER&D space is facing a severe slowdown because the United States and Europe are undergoing a slowdown. So something like a L&D technology services or a data tech as well, that stock has seen a massive correction down. So ER&D services continues to be my top pick within the IT space. Data tech, I'm looking out for that, though valuations are not cheap. However, that company has a lot of potential if the ER&D space continues to be. Other names include L&D technology, KPI, but all those stocks are really negative.
Okay. Sorry, Aditya, just one quick follow-up. I would also want Kush's view here, but did you happen to hear Datamatics? What did you think of that conversation?
Not able to comment.
Okay, fine. Fair call. Kush, that stock 3% higher today, as is the rest of IT pack. I know we've spoken at length about IT, but because we just did a Datamatics conversation, any thoughts there?
if only the team can pull up, just the last 1 month chart.
Yes,
of
we
that
can.
stock.
We can.
It has
Let's pull
been,
it up.
It has been a staggering, phenomenal move. I think the stock's gone upward about 60-70%, around that time. So I think this itself speaks for the view. It's already overshot, but to be completely honest, I would have called the stock overshot, at about 900, 950 odd levels. So yes, this is more of a momentum play now. No point entering at these levels. If you have, you could, well continue. In fact, you should continue to hold. Keep a stop loss near the 1030 mark and ride the wave. But this is too overstretched for any kind of fresh entry.
Overstretched for a fresh entry. On the technicals, and yes, indeed, that 1 month chart, stock's really taken off. If you zoom out and you look at the 5 years as well, stock has really taken off over the last month or so. But on to our bull versus bear segment. Today we have the pharma giant Lupin, and it's Varsha's day, of course, both on stock of the day as well as bull versus bear. Lupin has surpassed estimates with robust US sales in Q1, but a decline in API sales signals core segment challenges still remain. Varsha, talk to us about Lupin.
Right, thank you for that. But overall, if you see good set of numbers, EBITDA and net profit beat that the company has given, exceptional Q1 FY26 earnings. Now, this was driven by strong growth when it comes to US, and of course a little bit growth when it comes to India. Now the EBITDA margin expansion that you're seeing is on the back of favorable product mix that the company has seen, and of course if you see in the past few quarters there's been EBITDA margin growth. Now this was led by the cost initiatives that the company has shown in the past few quarters. But onto the API business, if you see, was down 33%, which indicate a weakness in the core segment. Even if you see the India business was up only 7.8%. Now, downtick in institutional business has led to the moderate growth when it comes to India business. So this is on the negative side, but company believes that they're going to be on track from next few quarters when it comes to India business. But strong US sales, if you see, the US sales grew almost 24% year on year, which demonstrates strong execution and pipeline potential, and the US growth was driven by new launches and the volume growth in existing products. Going forward, if you see, the US business is expected to grow, which will be driven by continuous growth in the respiratory franchisee, and of course the complex generics and injectables, which is likely to offset price erosion in the base business. But now, since we're speaking about the US business, the other disadvantage that the company has is the single-digit price erosion in the base US business suggests some pressure, and though we might see continued pressure when it comes to US generics business. Sustained R&D investments in complex generics and the robust pipeline provides long-term growth for the company, but delay in one of their products, which is used to control symptoms of asthma, so delay in that product shows that the complex launches can face setbacks and which can impact revenue timelines for the company. But on the bull side, you have the EBITDA margin. So they have reiterated, or they've maintained the guidance of EBITDA margin of 24 to 25% for FY26. In FY25, the margins were around 23%. So good uptick. Even now, they're expecting more uptick there, and a high single-digit to double-digit revenue growth for FY27 provides good visibility when it comes to financials for the company. But Pitambur Unit 2 and Unit 3 facility, if you see receipt form 483 with some observation, is one of the headwinds that the company has. But overall, good set of numbers, and of course the good growth when it comes to US business are the reasons why the stock was up yesterday and even today.
Okay, Varsha, thank you so much for explaining that in so much detail, and thank you so much for those insights. Kush, I'll quickly take up your view on the charts with respect to where Lupin is concerned.
So I'd wait for one more day because the stock has a falling trendline resistance from medium-term downturn, and also the high that it's made today is bang on at the 50-day moving average. So some resistance acting up. I would wait and watch. If this follow-through continues and the stock is able to sustain and close above the 1590 mark, is perhaps when you consider a long trade. Up until then, this could be a short covering bout.
By the way, some breaking news there. As per reports from agencies, Russian President Vladimir Putin is likely to visit India in late August. Geopolitically, I must say things are moving very, very fast, simply because we know that Prime Minister Modi is scheduled to visit both Japan, which has been slapped by the way with additional 15% tariffs, and China's SCO, August 31st. Now we're hearing that even Vladimir Putin is slated to come to India as well. So, you know, I mean, as much as US is slapping penalties left, right, center on countries, it better keep one eye out on what is it that the other countries are doing as a result of this as well. I'm not saying this is the result of the tariffs, but it is something that, well, nations should keep in mind. But, well, this is big news, is a very big development and something that you want to keep an eye out for. Okay, we need to slip into a break. Okay, actually, before we take a break, let me thank Kush Bora. Kush, thanks so much for joining in and really appreciate you taking the time out and being with us and your calls as well. And of course, Aditya stays on. We take a break, come back, dissect this piece of news a bit more if necessary, but also a keen focus on the last half an hour of trade, considering the fact that the markets are putting up a fight.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Exciting afternoon we're having in the markets today. Nearly a 200-point recovery from lows. We're waiting within the studio. We're waiting to see if you're going to flip into the green any second now. Maybe in the next few minutes.
We are right now almost in the green.
Yeah, almost in the green. You know, I think the recovery from lows of
in the green.
Yeah, there
on the Nifty 50.
Let's pull it up. Let's pull it up. This is, I mean, you want to call it a, thenga dikhana is one way you can say it in Hindi. You bring on your 50%. That's all right. We already have
75 kar do.
we already have meetings fixed. I think it's very interesting that Prime Minister Modi will be meeting Xi Jinping. The reports you all just talked about that Putin will be coming to visit India in late August, coinciding with the US delegation also. It's sounding like it's going to be a very hectic last few days of August, which will create that whole situation. And the way India is handling this, saying that, hey, wait a minute, we have other friends that we can dial.
Yeah. You're not the only, you're a very important game in town. We want to keep our relationships with you, which is why we are not being unsavory in our commentary. We are following diplomatic channels. But yes, we have other friends to dial. We have other games to play.
And we will look at our own domestic interest.
As we should, as any nation should.
Several screens turning green. I just want to recap that very quickly. The Nifty 50, yes, now in the green, I think for pretty much the first time of the day. The recovery led by IT stocks, and we should pull up all of those intradays because it shows you beautifully what kind of recovery has really taken place. And on the Nifty IT as well, near the day's high. So you're hitting maybe 20-25 minutes before end of trade, you're hitting a complete turnaround in mood. Where is the money coming in from? Where are investors coming in from is the question. You know, we spoke this morning to a whole host of big market voices that were talking exactly about this, that money is right now sitting on the sidelines looking for opportunities. Bank Nifty also has seen a pretty decent recovery actually from the lows of the day. Yeah, there you have it. Quite a sharp recovery on the Bank Nifty as well. And a lot of it coming with the news that you are going to maybe have Putin coming to India. I don't know if tonight you will hear more tariffs, like you said, 50 ka 75, and you know all of that might come in. There might be more tantrums, tariff tantrums to come. But meanwhile, the kind of voices and responses we're hearing from very astute market investors will give you a sense of how they are seeing this situation. Listen in to what some of them are saying.
There is this little bit of moving away from US, and if that happens and continues, then because US is 70 and the rest of the world is 30 or 68 or whatever, and you reduce 3-4% from US, we mean all collectively, and that 3-4% goes to the 30% base, everybody gets more money. And in that, India has a strong case. So India money, I think the overhang of selling has already gone away 1 or 2 months ago, according to me.
They believe better senses will prevail, and US will recognize that European Union, US itself have been trading with Russia. It's not just the Russian oil which funds Ukraine war effort. It is also the Russian gas which Europe is buying. It is also the Russian chemicals, fertilizers which America is buying. So market is hoping that better senses will prevail. The strategic interest of India and US will overcome current challenges.
You cannot move to a new market overnight. It takes time. And therefore, in medium to long term, for de-risking also, they are looking into the other market. The FTA has offered them an opportunity. I think UK will be a good big market once the UK Parliament approves the FTA. The early harvest with UK, with the EU will also help, and so with other GCC's countries. But these are in medium to long term.
You know, looking at new markets and developing contacts there and starting to export to those markets is not going to be easy. As far as our established markets are concerned, the European Union, which is one of our largest markets, China, which imports very little from us and could import a lot more. So these are some of the areas where we can focus on behalf of the government as well as the business.
Okay, Coforge, Persistent, Emphasis, these are the IT companies that are leading the recovery today as well. Rajesh Palvia joining in this afternoon. Rajesh, great time to have you on the show as we see that bit of a turnaround. Do you buy into it right now?
So I think we are almost recovered from the 100-day moving average support area, and now we are back above 24,500, a very strong short covering action on the weekly expiry option weekly expiry day. So I think yes, some confidence again. Looking at the broader market recovery, yes, there is confidence again coming back on the street. We have witnessed, huge supply pressure in last couple of days. But yes, I think this momentum can extend further as the kind of recovery we are witnessing in all the sectors. A possible up move can extend to 24,650 to 24,700. That's the major challenging area. 24,700 is the challenging area at this juncture. If at all we crosses those level, then another round of short covering will trigger in the Nifty. But till the time 24,700 is intact, I think really this pullback can face some supply pressure around those level. So yes, one can hold the long position for further more upside. At this juncture, trail stop loss towards 24,500. Even on the bank Nifty, also very strong buying action. BFSI sector is showing good traction. So I think bank Nifty is also showing sign of recovery, and short covering is also playing out here also. So back for bank Nifty 54 900 54 55,000 is the immediate base for this pullback. I think if we continues to trade above 55,000, I think this really can extend also towards 55,800 to 55,900. So maybe both indices can contribute to this rally, and we believe that another round of short covering could trigger in the market.
Interesting. Rajesh, your picks in this market?
So first pick is from the automobile space, that is TVS Motor, clear outperforming stock, series of higher top, higher bottom formation. Stock is at all-time high trajectory despite of volatility in market. So we believe that this outperformance may extend really further. We are projecting target towards 3,050 to 3,060 for trading point of view. Keep a stop loss towards 2,955 to buy TVS Motor. Another stock where we are focusing from the banking space, that is Indian Bank. Here also outperformance is there. Stock is comfortably trading about to all its near-term, short-term moving averages. So I think Indian Bank can extend its gain. We are projecting target of 660 to 670 for trading point of view, and on the downside, one can place a stop loss towards 638.
Okay. All right. So those are picks coming through for you. I want to quickly switch over to a development coming out of TCS, with the company which recently laid off a significant chunk of the workforce is set to give wage hikes from September the 1st. We have Jasmeet with us with regard to more on this one. Jasmeet, what do you have?
Well, right. Yes, thank you for that. TCS wage hikes in focus. Well, this news comes after the company announces the layoff of 12,000 employees eventually in FY26. When you look at the Q1 figures, the companies added an employer 5,000 employees, while as per the commentary, the employer did not pan out as much. While now we have the news of wage hikes. The company has plans to do the wage hikes from September 1st, and this wage hike could have some impact in the margins of Q2 as well as in the Q3. Now, to get on more details about the wage hike, the company is looking to provide a 2 to 4% wage hike for the employees which are on onshore basis, and to provide a 4 to 6% wage hikes for the employees in the onshore. When you look at the salary hike impact, while this will impact 4.5 lakh employees, that's almost 80% of total workforce, and the range of employees being targeted under it would be the C1, C2 and C3. While this category basically specifies that the impact would be for the employees who are earning anywhere between 15 to 35 lakh of package. So Q2 will be something to watch out for how this margins impact going forward.
Okay, TCS also showing some recovery, but Aditya, I want to come to you on the kind of recovery we're seeing in IT at all, overall. Do you think this is something worth buying into, and would you stick to the larger ones or look at some of the mid-cap names?
Within the IT pack, as I said, valuations are not cheap, but within the large cap IT, I would already be to tell them CFX and then TCS. Of course, I don't think this year the growth will return to the IT pack. Growth will only return next year for all IT. And after that, within the mid-cap IT space, you look at something like a Tata Tech or L&T Technology Services, L&T Protect Mindtree or Tata or Tata LXC for that matter as well. Valuations across the mid-cap IT space are not cheap. They are expensive. So one should be taking care of there. But somebody who's a long-term investor, only they can invest in the IT sector now. Think in the near term, don't look easy for the IT.
Okay, I assume you said, I couldn't hear you very clearly, Aditya. I'm assuming that you said that valuations are too high, right?
Yes, absolutely.
For you to find comfort. All right, we'll try and fix your line actually. Audio is not very clear. Rajesh, anything in the IT space that you're liking?
I think from oversold trajectory, most of the stocks now recovering. I think looking at the recovery, we believe that mid-cap IT from mid-cap IT, Coforge is looking attractive. After the corrective move, now stock is trying to find some support buying action around its previous swing low level. So I think 1660 is the key support area for Coforge. If it continues to defend this level for next couple of days, I think some more pullback action towards 1760, 1800 we may see for this counter. So Coforge one can look at from the mid cap IT space, and I think from large cap IT, if someone wants to go, I think Wipro is well placed, and I think Wipro can extend its gain from the current level. The way stock has turned from its oversold trajectory, if it continues to trade above 235 level, I think here also there could be chances to get some pullback action, possible up move towards 255. But again, these are all pullback trades. Trend is still on the weaker side. So in higher side, again, we may see some supply pressure to be remain in the system for IT stocks. So this is all purely for trading point of view. Keep strict stop loss, whatever stocks you are buying for pullback trades.
Okay. What else? I mean, there's this whole piece of stocks which become in focus as well because of the rejig, and the MSCI August rejig is also in focus with counters like Swiggy, Vari, Vishal Mega Mart and Hitachi Energy India shares likely to be a part of the MSCI Standard Index. Somit has the entire details. Now, Somit, there's a lot of calculation and a math and an assumption that goes behind it, but fill us in on this.
Well, yes, the announcement is expected to come in tomorrow early morning, and the flows regarding this changes, that is inclusion and exclusion, will happen on August 26th. So which are the stocks that might get included in the MSCI Standard Index? Firstly, it's Vishal Mega Mart, Swiggy, Hitachi and Vari Energies. These four stocks might get included in this MSCI Standard Index, and the inflows could be anywhere between 217 to 287 million US dollars in these stocks, which is nearly 2 times to 10 times the 20-day moving average. So keep an eye out for these counters. On the exclusion side, there are only two possibilities as per analyst. It's Sona BLW and Thermax, and the outflows regarding this exclusion could be anywhere between 150 to 190 million US dollars. Now, when it comes to the small cap index, multiple changes are expected, but I'll just give you the top 5 which are expected to see the highest amount of inflow if they get included in the MSCI Standard Small Cap Index. They are IKS, Capri Global, Brainbees, Lumax Auto and Bellrise, and if these stocks get included in the MSCI Small Cap Index, then the inflow amount could be anywhere between 5 to 12 million US dollars. On the exclusion side, only 4 stocks are expected to get excluded from the MSCI Small Cap Index. It's Bharat Dynamics, Bondara Engineering, Heikel and Kenna Metal, and if these stocks get excluded, then the outflow could be anywhere between 2 million to 29 million US dollars. Tomorrow morning is when the announcement is expected to come in, so keep an eye out for these counters in trade.
So, and Somit, I'm throwing this out of the blue at you, but past instances of these things, some of them move in expectations versus actual when the actual event happens, right? In this case, maybe because the markets have been a bit curtailed, that may not have happened. But have any of these stocks preempted this inclusion?
Well, yes, these inclusion and exclusion names have been going around in the market for quite a while now. But yes, the market reaction still could come in tomorrow, given the fact that markets have been very volatile of late. And the more, so yeah, if that happens, and if there is any surprise inclusion or exclusion, that would be also something important to track.
Amit, thanks a lot for that. And Rajesh, I would love for you to come in and talk about some of these. There is, of course, Vari, which is one of the candidates that Somit has spoken about, and a couple of others like Swiggy. Any thoughts on the charts, particularly on a Vari?
So I think Vari Energy, yes, we have seen a very strong rally in last couple of days, and the way you're talking about Vari Energy, okay, okay,
Vari Energies.
Okay, so yes, stock is now trading near to its important support area of 3150 for the near-term perspective. I think if it continues to trade above 3150, I think we could see some run-up on the higher side. On the higher side, 3250, 3300 is the immediate hurdle for the counter. If at all stock crosses 3250, yes, there could be, another round of rally can take stock towards 3450, even 3500 kind of zone. So yes, one can hold the position at this juncture with stop loss of 3140. It's a very small stop loss for trading point of view, but those who are positional trader can hold the position. The stop loss for positional trader would be around 2950.
Okay, a few buzzers today in the media space as well. Z, PVR, both of them looking quite exciting. Of course, IT is leading the charge, some pharma as well. But as far as PVR and Z are concerned, this is something that is it seeming like further upside on the charts?
PVR managed to give breakout of a very, small range of price action in last couple of weeks. So looking at the breakout on weekly chart, we believe that, if it's a hold 1030 level for next couple of days, there could be chances of really towards 1100 to 1150 in the continuation of this pullback action. So looking at the breakout on weekly chart, yes, one can hold on the position with 1030 as a stop loss. 1100 to 1150 would be the next target.
Okay. And what about your BTST for this afternoon? This is the time to stick your neck out.
Yeah. So Blue Star is looking very attractive.
Yeah.
There is a breakout on the daily chart as well as on the weekly chart. Falling trend line breakout is there for Blue Star. And looking at the breakout, we believe that, yes, this momentum can extend further. One can buy Blue Star for upside target of 1880 or 1890 zone. So one can buy this stock with stop loss of 1805. Again, Nifty is also showing the sign of recovery further, and the way short covering is playing out, I think as we speak, 24,700 would be the next level for the Nifty. So I think here also one can carry the position, and now one can trail stop loss higher further. 24,550 should be your stop loss to carry the position for next target of 24,700 for Nifty also.
Okay. All right. So that's Rajesh's view coming in. Blue Star's chairman and managing director Veer Advani shared an optimistic outlook. Of course, maybe not for FY26, but H2 and beyond is what he was suggesting, expecting margins to inch up by as much as 1% over the next 3 years, driven by favorable business mix and profitability focus. Listen in to a slice of that.
It's about mix of business, and then it's about profitability of each business. What I want to convey is that, segment one is expected to grow at about 15% a year is what we've been talking about. We expect segment two, which is the unitary cooling products business, to grow faster. So if that happens, that the unitary cooling products EBIT margin is higher than our B2B business, and therefore we should see that, business mix improvement on an aggregate Blue Star basis. Having said that, it's a hyper competitive industry. And as this category grows, there'll continue to be pricing pressure, and therefore we have to keep working on cost management, which is something that Blue Star does well. So net, difficult to give you a number, but we've been looking to improve our EBIT by at least 100 basis points, over the next few years, and we're confident of delivering that.
Okay, let's also look at some of the other counters in focus on the back of Q1 earnings. My colleague Vansh joining in with the details. Something like a Rain, Sula, GNFC really buzzing in trade today. Vansh, talk to us about those.
Yeah, so let me start off with Rain Industries. Now the stock is up on the back of the strong Q1 numbers that the company has reported. The company saw 13% uptick in the revenue from the carbon operations, and the carbon profit almost doubled for the company, and the cement profit also rose about 500%. If we talk about Sula Vineyards, now the stock is down 5%, and the margins are at all-time low for the company, and there has been a lowest EBITDA since the last 13 quarters, and the lowest ever PAT stands at 1.94 crores. Company also saw lowest quarterly revenue in the last 7 quarters, and the revenue has been impacted by the urban demand softness that is coming in. Third on the list is Gujarat Narmada GNFC. Now the revenue has been impacted by the lower volumes and the unproductive cost for the company, and they have saw a higher fixed cost repairs and maintenance, and there has been some chemicals that has faced margin erosion for the company. If we talk about the numbers, the revenue was down 20%, EBITDA was down 80%, and the margins were at 1.9% versus 7.6%, and the net profit was down 30%. So clearly a weak set of numbers that the market is penciling in for this counter.
Okay, thanks for that. Thanks for that, Vansh. Now 4 minutes left, and I just drew my attention to the stock that we were talking about earlier, and which is PVR. And guys, I don't know how you guys think about it, but I wonder if after quarters and quarters of pain, could this be an interesting next 3-4 months? Festive season coming up, people like going out, and I was just checking on X, right, the trending things. Yesterday there was a Ranbir Kapoor thing trending because there are 2 movies coming out between now and Diwali of his. Then there's a Hrithik Roshan movie coming in, Hrithik Roshan and NTR movie coming. I'm presuming that Salman Khan, Shah Rukh Khan would have a couple of movies as well, and then there might be international releases. Are we looking at a packed stardust calendar, and could that bring in the crowds?
I'm first of all shocked. Shocked to hear this from you. For the last year and plus, and with last season this time as well. We've been talking about this, and you have been convinced that movie mein koi nahi jata.
Nahi jata, I agree.
Yeah.
Now, could there be a change?
I think something is changing. I agree with you. I think something is changing. And there is a movie hall that I pass every day. It's not a PVR, but it's a movie hall that I pass every day when and I head home. And I'm seeing crowds come in on your Fridays, your Saturdays, your Sundays, more than before. People are rediscovering it. You need a few good movies to do that. And then all your superhero and international lineups also definitely help.
Yeah.
I think there might be some turnaround. If they, if the numbers seem like if they can control some costs, etc., smart use of their theaters, like they did with IPL.
Yeah.
So maybe something to look at.
As it's been a while since we've actually seen a decent hit come our way as well. So hopefully with just this bunched up set of movies coming in.
Sorry, just to I know we are explaining too much, but globally, I mean, F1 was a raging hit, I believe, in India as well.
Yeah.
Yes.
So in some sense, the global thing has happened.
Yes. I haven't managed to go see it yet.
But apparently, it's a raging hit. It's a good movie, but it's a raging hit. So now, need to see if other movies.
Rajesh, what movie are you watching this weekend? What have you planned, or which movie have you seen last?
No, I don't remember. I have not seen any fresh new movie in recent past.
I want to come back to you on the Nifty though, because the last time we spoke about this, and it was just when things were turning around. But look at it, the Nifty IT now 1% up. Bank Nifty smart recovery, Nifty Auto smart recovery, and we should run intraday charts of all of this. Even for the Nifty, I mean, what a turnaround on Nifty 50. You're at the day's high. Are you still being as cautious as 20 minutes ago, just seeing the strength in the charts?
No, there is a strength on the chart, and I think with the stop loss of 24,551 can carry the position. I think this pullback can extend further. 24,700 would be the next target for Nifty, and I think in the Bank Nifty also some shorts are covered by the call writers. So I think here also we may see extension of this pullback. 55,800 to 55,900 would be the next level. So both indices, I think, can continue furthermore pullback in the tomorrow session, so one can carry the position.
Thank you for that, Rajesh. And I just want to point out to those of you who may have tuned in this morning to watch India Market Open, Neeraj, we spoke about this. We spoke about this in the morning that maybe, just maybe, you're going to see a recovery. And this is a sharp recovery.
To be fair, you did.
Yeah.
To be fair, you did.
Okay. So we did speak about it. I did speak about it. And for the simple reason that you're hearing from so many analysts that there's money waiting on the side. I mean, now, Indian investors have gotten used to using every opportunity, and this seems to be a taco trade in play. Yeah, maybe that's what it is. Indians munching on tacos this afternoon as we wrap up, Harsh.
Well, absolutely. An expiry day which has not failed to surprise with the way in which we've seen the kind of move we've seen. 24,600. Midway through the day, I don't think too many people would have placed their bets on seeing 24,600 today itself. And let's look at the intraday, 1/3% higher on the Nifty Bank as well. And just look at the way we've turned around, at least over the last couple of hours. It's been fantastic to watch and be part of at least this move that we saw over the last couple of hours. Now, in terms of the heat map, let's look at that as well. And where the breadth was looking extremely difficult, just 4 gainers is what we had to 46 losers. We now have turned it around, 31 gainers to just about 19 losers that we are seeing. Of course, there's pressure on a couple of counters, no doubt about that, but Hero Moto is the one which stands out. 4% higher on the back of numbers. Tech Mahindra and the IT stocks have turned it around completely. You'll see Tech Mahindra there, Wipro there, HCL Tech there, TCS also up around 0.5% thereabouts. So the entire IT pack front loading itself on that Nifty 50 index. There's also a JSW Steel and a couple of other counters, a Coal India as well within that similar kind of sector. Eternal is up 1% as well. Let's pull up the contributors on the index. I'm curious to know which ones have done extremely well. And in HDFC Bank, Hero Moto, well, far and few in terms of chunky contributors, but nonetheless, we've seen that turnaround in terms of the contributors as well. Let's look at the heat map on sectors, and what we'll again notice is this was entirely red, now has turned predominantly green. IT, of course, 0.9%, the top gainer from the bottom likely within sectors. Nifty Pharma is the other one. So IT and Pharma, where there is no tariffs, have completely one way pushed the street higher. The PSU banking index, of course, supporting, and you have the auto index also supporting well in the green. The metal index, which is down over 1%, has turned green as well. So some pockets to take care of. The Nifty India Defence, which is down nearly 2%, is now has recovered from those lows. So we're seeing that as well. And the Nifty Realty is nearly in the green. Just a slight negative bias that we're seeing there. Let's look at the advanced decline, and I'll be curious to know how that has reversed, because we were, well, it's reversed very sharply. We're closing very close to 1:1 when this was nearly 1:5 just about an hour and a half back. So real sharp reversal that we've seen on the index, and that's replicating on the advanced decline as well. The Nifty mid cap, let's quickly pull that one up intraday, and you'll see a very similar texture of recovery, 1/4% higher from down nearly 1%. And the Nifty small cap as well was down over 1.2%, and now it in fact turned green briefly and thereafter has just dipped. So fantastic day for the market in terms of the way the move is. Let's look at, there you go, the BSE 500 top gainers, top losers. Plenty of them on the back of numbers, Rain Industries and ITI as well. And FSL up 6%. Wow, that's First Source really moving up. And Varroc also up 5% along with Kaplan Point. Lupin, fantastic set of numbers, 4.7% higher. Prince Pipes down 8. Again, a lot of these are casualty of numbers. GNFC, Prince Pipes, Godfrey Phillips. This has been one which has gone up very sharply. So we're seeing a bit of a cool off there. Hickel is down 5, and EID Parry also down nearly 5%. So that's broadly SKF, again on the back of numbers, down 4%. In terms of cues, what all should we look for? Of course, outside of the commentary and the tweets that keep coming our way, we have US initial jobless claims, and we have the BOE interest rate, which is the Bank of England interest rate decision. We'll have dividend with regard to all of these, which will come through, and there will be those dividend adjustments which will happen. There's a bonus issue on Nestle India, 1:1, and you'll have all of these earnings which will come post market today, and LIC will be the big one we'll watch out for. This is the earnings to watch out for tomorrow, and SBI will be one of those. Among others, we'll also have a JK Tyre within the auto space. We'll have Grasim as well coming in tomorrow. Tata Motors will be the other big one to watch out for tomorrow. So plenty of names to look out for in terms of earnings as well. But viewers, completely out of time on this edition of India market close. A big announcement coming in though. Russian President Vladimir Putin is expected to visit India in late August, says India's National Security Advisor Ajit Doval during a meeting with the Russian Security Council Secretary Sergei in Moscow. Listen in to a slice of that.
You have very rightly mentioned, Excellency, that we have got a very special relationship, a long relationship, and we highly value our strategic partnership. We have had high-level engagements, and these relationships, these high-level engagements have contributed very substantially. We are very excited and delighted to learn about the visit of His Excellency the President of Russia, President Putin, to India. I think that the dates are almost finalized now. The more important thing is this, that is, these summit meetings have always been the watershed points.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome. Good afternoon. You're watching Market Express and I'm your host Malika Mishra. Let's get straight into the show. Markets shrug off Trump's tariff threats, end the day in the positive territory. HDFC Bank, Eternal, Hero MotoCorp contribute the most to the indices. HUL and M&M amongst the top sectoral loser. Nifty manages to end near day's high. Sectoral action remains mixed. Nifty, Media and IT end as the top sectoral gainers. Bitter day for the Nifty Defense and Realty. US President Donald Trump imposed a 50% tariff on Indian goods, apparels, textiles, diamonds and chemicals face the biggest hit. Knitted apparel exports could see a 63.9% tariff. Textiles and diamonds also face over 50% duties. The tariff effective August 27 targets India's Russian oil imports. Indian exporters brace for a 40 to 50% drop in US shipments. Sending a strong message a day after US President Donald Trump escalates the tariff war against India, Prime Minister Narendra Modi emphasizes that India will never compromise the interests of its farmers and fishermen. The sharpest minds weighed in on US President Donald Trump's 25% tariff, which shook the markets today. Nilesh Shah of Kotak AMC said it is fatal to be America's friend. Markets expect a trade deal as US-India interests align. Tariffs effective August 27 target India's Russian oil trade. Shah predicts market volatility but hopes for negotiations. India's economy faces risks from global trade tensions. Trent delivered a strong Q1 FY26 with standalone net profit up 24% YOY, beating estimates of 405 crore. Revenue grew 20%, slightly below the 20% guidance, reflecting a multi-quarter low. EBITDA surged 37% with margins expanding to 17%, driven by inventory provision reversals, low employee costs, technology-driven efficiencies and reduced rental expenses. Fashion segment like-for-like growth slowed to low single digits from mid-single digits in Q4. Store additions were below expectations. Trends Q1 FY26 results with a 23% YOY net profit rose and 20% revenue growth drew varied brokerage reactions. Citi maintained a buy rating but cut its target price to 7,150, citing moderated like-for-like growth and a 0 to 2% EBITDA estimate reduction. Morgan Stanley is overweight with a 6,359 rupee target, sees the slowdown as a strategic move, emphasizing margin gains. Jefferies holding at 6,000 notes flat unit EBITDA but questions a 7% staff cost drop despite 30% retail expansion. Bajaj Auto reported a 5% YOY increase in Q1 of FY26 standalone net profit, beating estimates of 2,050 crore rupees. Revenue grew 5%, driven by 14% export growth and double-digit gains in premium motorcycles, commercial vehicles and Chetak electric scooters. EBITDA rose 3%, but margins dipped to 20% due to lower dollar realization and rare earth magnet supply disruptions. Total sales edged up 1%, with domestic two-wheeler sales down 9% YOY, reflecting 8 months of flat to negative growth. Jefferies maintained a hold rating on Bajaj Auto with an 8,000 rupee target, implying an 18% downside post a subdued but in line Q1 FY26 result. Net profit rose 5% YOY, driven by 14% export growth. Jefferies is optimistic about India's two-wheeler demand, but cut its FY25-28 industry volume CAGR to 8% from 10% earlier. Concerns include Bajaj's declining domestic motorcycle share and export volume share, while praising Bajaj's Chetak EV franchisee. Hero MotoCorp reported a modest 0.3% YOY increase in Q1 FY26 standalone, aligning with the 1,120 crore estimate despite a 10% YOY sales volume decline to 13.92 lakh units. Revenue fell 5% and EBITDA dropped 5%, with margin stable at 14%. Weak domestic demand, particularly in the entry-level segment, was offset by premium motorcycle growth. The company invested 510 crore rupees in Euler Motors to bolster its EV strategy. Gujarat Narmada Valley Fertilizers and Chemicals reported a 30% YOY drop in Q1 FY26, hit by lower volumes and high costs during planned shutdown. Revenue fell 21%, driven by weaker fertilizer and chemical demand. EBITDA crashed 80% to 31 crore rupees, with margins shrinking to 2% from 8% due to higher fixed costs from repairs and lower chemical realizations. Management remains optimistic, citing cost revisions and capacity expansions to boost future profitability. Prince Pipes and Fittings reported a challenging Q1 FY26, with consolidated net profit crashing 80% YOY, driven by inventory losses from a 12% YOY PVC resin price drop. A revenue fell 4% to 580 crore rupees despite a 4% volume increase. EBITDA dropped 32%, with margins shrinking to 7% from 10% due to lower realizations and higher interest costs. Management expects recovery in second half of FY26, driven by festive demand and stable PVC prices. Sula Vineyards reported a tough Q1 FY26, with consolidated net profit plummeting 87% annually, driven by a 10% revenue drop. EBITDA fell 46%, with margins shrinking to 17% from 28% earlier due to lower gross profits and weak urban demand in key markets like Mumbai and Delhi. Wine tourism revenue remained flat, while premium wine sales grew 5%. Management expects recovery in the second half of FY26 with festive demand and new launches. Life Insurance Corporation of India (LIC) is set to report Q1 FY26 results today, with expectations of a 4% annual premium equivalent growth to 10,350 crore, reflecting modest top-line expansion. Value of new business is projected to rise by 9% YOY, driven by a 70 basis points margin improvement to 15%. Focus remains on non-power segment traction, persistency, trends, and expense control. While LIC targets a 20% VNB margin by FY26, regulatory pressures and weak APE growth pose key challenges. Lupin posts strong Q1 FY26 results, beating profit and EBITDA estimates. Revenue rises 11.9% YOY, driven by robust growth in US and India markets. US sales jumped 24.3%, now 39% of global sales. India up 7.8%. Global API sales slumped 32.9%, dragging segment contribution to 4%. Rain Industries returns to profit after 7 loss-making quarters. Q1 FY26 revenue rises 7.5%, driven by strong carbon and cement segments. EBITDA soars 88.8%, with margins nearly doubling to 15%. Stock jumps 6% on earnings and EV battery tie-up buzz. Hardco posts strong Q1 with 13% profit growth. Income jumps 34% YOY, driven by higher loan book. OPEX surges 218%, but asset quality improves. Return on asset dips, capital advocacy remains robust. Prison Johnson's shares surged nearly 5% after strong Q1 results. Net loss dropped 70% to 5.6 crore rupees from 18.3 crore rupees last year. Revenue rose 7% to 1,922 crore rupees. EBITDA jumped 28% to 169 crore, boosting margins. The company improved cost control and operations. Investors cheer the turnaround despite a tough market. In a letter to shareholders, Reliance Industries chairman Mukesh Ambani said the company is transforming into a deep tech enterprise. The company achieved solid growth despite global challenges. Revenue hit 10,000. Revenue was up 7.1% year on year, and Jio leads as the world's largest data network with over 488 million users. Retail expanded to 19,340 stores, boosting India's retail sector. Ambani credits shareholders' trust for Reliance's bold vision. Paytm reduced its workforce by 4,600 in FY25 to cut costs. The company saved 650 crore rupees, exceeding its 400 to 500 crore rupee target. Employee count dropped from 44,000 to 39,400. Permanent staff fell 48% to 14,656. Paytm focused on a leaner structure using AI technology. Revenue declined due to RBI restrictions on Paytm Payments Bank. Adani Airports plans to invest 20,000 crore in city-side developments. Nearly 70% will focus on Mumbai and Navi Mumbai airports. The goal is to raise non-aeronautical revenue to 70% by 2030. Navi Mumbai's 240-acre project includes hotels, offices and retail. The plan mimics global airport city models like Schiphol. Adani aims to build a stronger business model. LTI Mindtree won a 792 crore rupee contract from the Income Tax Department. The PAN 2.0 project aims to modernize PAN and TAN systems. It will create a single-digit platform for all services. The platform will use AI for faster, secure processes. Rollout is planned over the next 18 months, and LTI Mindtree's stock today fell about 0.8% despite this deal. Adani Power has received the go-ahead to build a 2,400 megawatt ultra supercritical thermal power plant in Bihar's Bhagalpur district. The $3 billion project was awarded through a competitive bidding process by the Bihar State Power Generation Company. Adani Power will supply 2,274 megawatt to state discoms at a tariff of about 6.075 rupees per unit under a long-term agreement. The plan will follow a DBFOO model where the company will design, build, finance, own and operate the facility. The first unit is expected to be operational within 4 years, with full capacity coming online by the 5th year. Tata Consultancy Services has announced salary hikes for roughly 80% of its workforce, covering mid to junior level employees. These wage increases take effect on September 1st, 2025 and were communicated via internal email by CHRO Milind Lakkad and CHRO designates K. Sudeep. The announcement comes alongside plans to lay off over 12,000 mid and senior level employees this year. Infosys has inaugurated a new Center for Advanced AI Cybersecurity and Space Technology at its Hubli Development Center in Karnataka. The facility is part of Infosys' Global Living Labs network with over a dozen centers worldwide. It will develop AI-driven solutions across key domains like cloud, engineering, services, SAP, and space tech, and as well as a lot more. With this launch, Infosys has raised its local employee count in Hubli to more than 1,000, marking a milestone for both regional employment and industry-academia collaboration. Zerodha's Rain Matter bought 5% stake in Capital Mind Financial Services. This is Capital Mind's first institutional funding. The deal follows the launch of its Flexi Cap fund raising 45 crore rupees. Deepak Shenoy, Capital Mind CEO, calls it a validation of their journey. Zerodha's Nitin Kamath backs Shenoy's data-driven approach. The investment aligns with SEBI's 10% stake cap. Air India has introduced a dedicated emotional and mental well-being app for its pilots, cabin crew and their families. The initiative is aimed at supporting the mental health of its flying staff through a structured and confidential platform. The app includes features such as one-on-one therapy sessions with professionals, AI-powered chatbot for real-time assistance, and access to over 600 self-care tools. This development follows a recent incident involving a crash near Ahmedabad in June, which led to a noticeable spike in sick leave among the crew. Popeyes, the Louisiana style fried chicken chain, has made its debut in Mumbai with 4 new outlets operated by Jubilant Foodworks under a master franchisee agreement. The brand first entered India in January 2022 and has since expanded across Bengaluru, Chennai, Hyderabad and NCR. Sameer Khetarpal, CEO of Jubilant Foodworks, expressed his excitement, saying, "We're thrilled to bring Popeyes to Mumbai and we are confident that Mumbaikars will embrace our signature offerings with the same enthusiasm." Instagram has introduced a fresh set of features aimed at making the platform more interactive and personalized. Users can now repost public reels and feed posts directly to their profiles. The platform has also added a new Friends tab within Reels. Now, this section highlights what your friends are engaging with, whether they have liked, commented on, or reposted a video. And finally, Instagram has launched an opt-in map feature. It allows users to share their most recent location with selected friends, helping people stay connected in real time. Tragedy struck in Udhampur, Jammu and Kashmir when a CRPF vehicle transporting personnel from the 187th Battalion veered off the Kandwa Basantgarh road and plunged into a deep gorge. Over 2 jawans lost their lives and several others were injured. Rescue teams with vital help from local residents reached the site swiftly and evacuated the wounded to nearby hospitals. Union Minister Jitendra Singh and J&K Lieutenant Governor Manoj Sinha both conveyed their grief and assured that full medical support and investigations are underway. The Supreme Court decisively rejected Justice Yashwant Verma's petition challenging the in-house committee that had recommended his impeachment following the discovery of burnt cash at his official residence. The court described his conduct as not confidence-inspiring and upheld the committee's constitutional validity, clearing the way for Parliament to initiate the impeachment process. The Election Commission issued the official notification for the vice presidential election scheduled for September 9th. The nomination process has now begun. Candidates must file their nominations by August 21st, with document scrutiny on August 22nd, and the final deadline to withdraw standing at August 25th. Chief Minister Devendra Fadnavis has reconsidered the decision to shut down Mumbai's pigeon feeding zones known as Kabutar Khanas, calling the abrupt ban inappropriate. He's directed the BMC to allow feeding under controlled conditions to ensure pigeons aren't starved while the city addresses health risks. The Bombay High Court's directive to curb public pigeon feeding due to hygiene concerns still stands, and the BMC must now find a balanced, time-bound solution to this. President Donald Trump has announced that his new reciprocal tariffs are now in effect, calling them a response to countries that have long taken advantage of the United States. He declared, quoting, "The only thing that can stop America's greatness would be a radical left court that wants to see our country fail." This pointed message came amid mounting legal challenges to the tariffs. Donald Trump said he could meet with Vladimir Putin very soon following what the US president described as highly productive talks in Moscow between his special envoy and the Russian leader. The potential summit was discussed in a call between Trump and Ukrainian leader Volodymyr Zelensky that, according to a senior source in Kyiv, included NATO Secretary General Mark Rutte and the leaders of Britain, Germany and Finland. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Market closes in green after a last hour rebound. Nifty bounces nearly 300 points from day's low to end above 24,600. All sectoral indices barring oil and gas close in the green. The Prime Minister sends a strong message to Trump's tariff hike, says India will never compromise on farmers and fishermen's interest, and he's ready to pay a huge price for this personally. Trump's 25% additional tariff on India rattles exporters. They say the impact is much more than the previous 25% tariff plus the penalty, as US importers are reluctant to finalize orders. Trump's sweeping new tariffs on more than 90 countries around the world come into effect just before the deadline for deals to be agreed to cut or to avoid the import taxes. Trump posted on his Truth Social platform that billions of dollars were now flowing into the US due to tariffs. As Trump intensifies the tariff offensive, Russian President Vladimir Putin will visit India in late August. Announcement comes after NSA Ajit Doval's meeting with Russian Security Council Secretary Sergei Shoigu in Moscow. TCS will roll out wage hikes from the 1st of September to 80% of its employee base. IT majors looking to provide 2 to 4% raise to onshore workers, while 6 to 8% increase in offshore salaries. Rescue efforts continue in Uttarakhand's Harshil and Tharali after flash floods and landslides this week. 59 people, 50 civilians and 9 soldiers are still missing, and 5 deaths have already been confirmed so far. Hello and welcome viewers, you're watching Profit 360 only on NDTV Profit, and this is your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay tuned. Let's begin with checking how the markets fared today. The market posted a stellar recovery in the last hour of trade as Sensex recovered over 800 points from the day's low, while the Nifty bounced nearly 300 points from the day's low to close above 24,500. Earlier in the day, Sensex and Nifty fell after US President Donald Trump announced an additional 25% tariff on Indian goods, effectively doubling the total tariff to 50%. Let's go across to my colleague Harsh, who's going to help us understand how the markets traded today.
Well, the market started the day on a cautious note, right? And understandably so, given everything that was happening with regard to tariffs and all the announcements that came through. And thereafter, while the reaction initially was quite mature, saw a bit of a slip, and probably attribute that to a certain extent also to expiry day. But thereafter, the reversal was fantastic. In fact, we closed the day in the green. We rebounded nearly 300 points from the day's low, and the breadth, which was looking extremely difficult at one point. In fact, the Nifty 50 breadth was just 4 stocks sitting in the green versus 46 sitting in the red. Completely reversed. At close, we had nearly 30 stocks in the green and just about 20 in the red. So that was the kind of recovery we saw in the last hour and a half of trade. So fantastic day, right? Now let me talk about the leaders of the day. We saw IT and pharma really lead, especially where the benchmark is concerned. And some of the IT stocks from the lows have done extremely well. You saw Hero on an otherwise difficult day of trade stay perked up in the green pretty much all through the day. So that was the one that really stood out. And then you had the pharma basket, which rebounded decently well, but the IT basket was the one which you really need to look out for. It rebounded nearly 2% from the day's low. So fantastic day where IT is concerned. Now, in terms of the breadth overall on the index, that was broadly the trend across the board. So that's what you'll see even on the advanced decline, which closed nearly 1:1. At one point of time was 5:1 in favor of the declines. Closed nearly 1:1, so fantastic day there as well. You saw the Nifty mid cap as well as the small cap indices also do fairly well for themselves. From the day's low, we saw good bounces back, 1.2%, nearly 1.2% from the day's low for the Nifty small cap. The Nifty mid cap also rebounded nearly 1% plus from the day's low. So across the board, the day was a day of recovery. and whether it's short covering or otherwise or expiry day, that we'll of course have to wait and watch whether this is sustainable or not. But otherwise, it's a fantastic day nonetheless.
Right, and as the markets take a dramatic U-turn, Prime Minister Narendra Modi has taken a firm stand on the US pressure of tariffs, stating that India will not compromise on the interest of its farmers, livestock holders and fishermen, no matter what. His response comes after US President Donald Trump imposed an additional 25% tariff on India for continuing to import oil from Russia.
Indian officials have said that there are other countries that are buying Russian oil.
It's okay.
Like China, for instance,
It's
buys
okay.
more.
Yeah.
Why are you singling India out for these additional
It's
sanctions?
only been 8 hours, so let's see what happens over the next.
More secondary sanctions
you're going to see a lot more.
So this is a taste of
You're
what's
going to
to
see a
come.
lot more. You're going to see so much secondary sanctions.
साथियों, हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है। किसानों की आय बढ़ाना, खेती पर खर्च कम करना, आय के नए स्रोत बनाना, इन लक्ष्यों पर हम लगातार काम कर रहे हैं।
In fact, we were joined by Sameer Arora, Nilesh Shah, Ajay Sahai and Jayant Dasgupta, who weighed in to talk about the strategic and economic implications of the recent trade disputes between the US and India. Let's listen in.
There is this little bit of moving away from US, and if that happens and continues, then because US is 70 and the rest of the world is 30 or 68 or whatever, and you reduce 3-4% from US, we mean all collectively, and that 3-4% goes to the 30% base, everybody gets more money. And in that, India has a strong case. So India money, I think the overhang of selling has already gone away 1 or 2 months ago, according to me.
They believe better senses will prevail and US will recognize that European Union, US itself have been trading with Russia. It's not just the Russian oil which funds Ukraine war effort. It is also the Russian gas which Europe is buying. It is also the Russian chemicals, fertilizers, which America is buying. So market is hoping that better senses will prevail. The strategic interest of India and US will overcome current challenges.
You cannot move to a new market overnight. It takes time. And therefore, in medium to long term, for de-risking also, they are looking into the other market. The FTA has offered them an opportunity. I think UK will be a good big market once the UK Parliament approves the FTA. The early harvest with UK, with the EU will also help, and so with other GCC's countries. But these are in medium to long term.
You know, looking at new markets and developing contacts there and starting to export to those markets is not going to be easy. As far as our established markets are concerned, the European Union, which is one of our largest markets, China, which imports very little from us and could import a lot more. So these are some of the areas where we can focus on behalf of the government as well as the business.
And amid all this, the most vulnerable segment seeing the impact of heightened India-US trade tensions are Indian exporters. NDTV Profit brings to you a ground report speaking to multiple exporters from engineering, steel and textile sectors, encompassing the challenges that businesses are facing. Take a look.
As trade talks between US and India seem to have hit a roadblock with no sort of deal in sight, and the threats and the renewed threats rather of the Trump administration to impose more and more tariffs have left one segment of the Indian trade ecosystem very vulnerable, and that is Indian exports. Indian exporters are facing the brunt of these tariffs and these uncertain conditions that come along with it. NDTV Profit speaks to exporters on the ground to get you an insight as to what these exporters are facing and what the impact of such conditions is on their businesses. We first spoke to Kisan Engineering Works, an MSME exporter of phalanges, which is a major engineering export. This is located on the outskirts of Ghaziabad, and here we spoke to the MD to understand the impact of tariffs.
Our impact is much more than the 25% plus penalty thing. Steel and aluminum has already been covered by the US government by a 50% tariff. It is basically subsidizing the industry and preventing it from collapsing in the immediate term. I expect the political class and the executive class to be more rational and more open their bags of money.
Another sector that's feeling the heat is the textile sector, and we're here at BK Fashions to understand more about the uncertainties and the impact of tariffs.
So the future orders is being on hold from the customers because they are still don't know what's going to be the next future for Indian tariff plan. So currently we are in a very bad situation. We expect some percentage to be, fulfilled by the government and take this difficult situation in consideration, to negotiate, because buyers are negotiating on the prices. They want us to give the discounts. Buyer are, they are getting the better tariffs from the neighboring countries, so they have better margins there.
Right. Yet another garment exporter that has been impacted is BK Garments, based here in Noida's industrial hub. We also spoke to them about the uncertainties on the tariff front, as well as the orders that are coming in from external geographies.
They are also uncertain about what will happen next. So they can't also finalize how much discount they have to demand from us. If something happens, our government will help. That is our hope. Our government policies will certainly be helpful to the exporters to maintain the export momentum.
Is there any outreach from the government so far?
So far, nothing happened yet. We are waiting for what the government policies are finalizing.
You've heard from the exporters directly. The uncertainty is unbearable and business is getting impacted. What the request from the government is for immediate action, is for policy and monetary support.
Right, and as Trump's tariffs continue to make exporters apprehensive, there's still a segment in the Indian stock market, some stocks, some companies that are likely to be less effective by Trump's tariffs. They are tariff-proof, that's what we call it. But to know which ones exactly those are, let's go across to my colleague Samit.
Well, yes, Trump has announced a 25% tariff on Indian exports that we are doing currently, and additional 25% will get implemented after 21 days. But for the current 25% which gets implemented today, as per analysts, this tariff impact will have earnings impact of nearly 5% on the MSCI India earnings. But if additional 25% comes in, then this could be around 10%. And when it comes to the GDP growth number, that could get impacted by around 30 to 50 basis points for the 25% which is getting implemented from today. And if additional 25% comes in, then as per analysts, this impact could be anywhere between 40 to 80 basis points on the GDP growth number. Now, multiple sectors get impacted. There is auto, there is chemical, there is textile, there is oil and gas, which could get impacted because of the ban of Russian crude. Then there is new energy and seafood, which also get impacted because of this ban. But there are multiple other sectors which actually get least impacted because of this Trump tariff coming in. And these sectors are banking, NBFC, insurance, cement, consumption, hospital, real estate, telecom, power, and these are all domestic focused or domestic centric companies, so they get less impacted because of this tariffs that has been implemented by the United States of America. Now, if you look at the stocks, now these are the stocks, obviously this is not an exhaustive list, but these are the stocks which get nearly 90 to 95% of their revenue from the domestic market, or at least 90 to 95% of their SOTP, that is the target price value, comes in from the domestic market. When it comes to banks, it's HDFC Bank, ICICI Bank, Axis Bank, Kotak Mahindra Bank. Again, this is not an exhaustive list, but these are the top companies which get least impacted because of the Trump tariffs. When it comes to NBFCs, there are NBFCs like Bajaj Finance, Shriram Finance, Chola Finance, which get less impacted. In insurance, there is LIC, HDFC Life, SBI Life, ICICI Pru, ICICI Lombard in the general insurance side. When it comes to cement companies, it's names like Ambuja, Ultratech, Shree Cement, Dalmia Bharat. In consumption sector, there is stocks like Zomato, Trent, Titan, United Spirits, Page Industries. Again, there are more consumption-focused companies that get less impacted because of this Trump tariffs. In hospital, it's zero impact. Apollo Hospital, Fortis, Max Healthcare all derive nearly 100% of their revenues from the domestic market. When it comes to real estate, all of these companies generate nearly 100% of their revenues from the domestic market. That's DLF, Lodha, Phoenix Mill, Godrej Properties. In telecom, it's Bharti Airtel, which derives nearly 90% or more than that of its SOTP value from the India market. Bharti Hexacom, 100% India market. Industars, again 100% of its revenue comes from the India market. Apart from that, in the power sector, there is Adani Power, Adani Transmission, Power Grid, NTPC. In auto, most of the auto sectors do get impacted, mostly auto ancillaries, but then there are few auto companies which generate nearly 90% or more than that of its revenue from the domestic market, and those are Ashok Leyland, Hero Moto, Aisha Motors and Escorts as well. And lastly, when it comes to the travel and tourism sector, it's Indian Hotels, Lemon Tree, IRCTC, which generate nearly most of the revenue from the Indian market, and they also stand to get least impacted because of this Trump tariff. Obviously, if there is a big GDP slowdown, then each and every Indian companies might get impacted, but at least because of the Trump tariffs or the tariffs that are getting implemented on exports, these companies will get least impacted because of that.
Right, thanks for that. And India's IPO market remains lively with several offerings lined up this month. One notable IPO opening today is JSW Cement, led by Sajjan Jindal, aiming to raise about 3,600 crore rupees through a mix of fresh issuance and offer for sale. My colleague Sajid spoke with Parth Jindal, MD JSW Cement, about the company's IPO and the future prospects. Let's hear in his perspective.
Parth, your IPO is coming on 11th. Can you take us through the entire proceeds which you're going to raise? It's the 3,600 crore IPO, and I think the second one in the last couple of years after JSW Infra, which came out with an IPO. How are you going to use the proceeds?
Sure. So the IPO opens on the 7th and closes on the 11th. And like you rightly said, we're raising 3,600 crores. 2,000 crores is an offer for sale where the private equity investors in JSW Cement, Apollo, Synergy Capital as well as State Bank of India would be partially offloading their stake. And the 1,600 crores is getting infused into the business as primary. We've disclosed that about 520 crores of that is going for debt repayment. About 800 crores of that is going towards building our integrated unit in North India at Nagaur in Rajasthan. And the balance is being used for general corporate purposes. So the purpose of this IPO is really to enter the North Indian market as well as to become a pan-India cement player. And this is the first step in our journey from 20 million tons where we are today to 42 million tons, which we would like to get to over the next 3 to 5 years.
Do you see the this IPO being also an exit for some of the investors who came in 2021? Because your valuations have more than doubled since the time they came in. I think, if I'm not wrong, 1,600 crores for 18-19%, and now we are looking at 19,500 crores for the upper band which is there. So is that also one of the reasons?
Yeah, so the upper band is at 20,040 crores, and you're right. They came in at a lower valuation, and they would be partially exiting, but they will still retain about 7% of the company even after the IPO. So yes, every fund has its strategy. So I'm sure they are looking at they are partially exiting, and partially they would remain in the business. And they came in at a very timely time for JSW Cement. That 1,600 crores that they invested in 2021 has really allowed us to expand and become the 20.6 million ton company that we are today. So we'll always remain grateful for their participation, because without the capital that they provided in 2021, we would not be where we are today.
And TCS is set to roll out wage hikes to nearly 80% of its employee base from the 1st of September. This comes weeks after the IT major announced that it will be cutting about 12,000 jobs in the current financial year. We have Jasmeet with more on this. Jasmeet, who's eligible and what's the expected hike?
Well, right. Yes, thank you for that. Now, TCS, as per our sources, TCS should soon announce the wage hikes. Now, this news comes after the latest news where it plans to cut 12,000 employees going forward in FY26. Now, when you look at the Q1 FY26, the management had added 5,000 odd employees, and as per the commentary, the added employees could not pan out as planned and was creating a pressure on the margins. Now, giving the latest update, as per the sources, the wage hike to set in from September 1st, and they could impact the margin in the Q2 as well as in the Q3. Now, talking more about the wage hikes, the company is looking to provide a 2 to 4% hike for the employees available on onshore basis, while to provide 6 to 8% hike for the employees available on the offshore basis. Now, nearly 80% of the employees of TCS to get the wage hike, while that would be roughly 4.5 lakh employees. While this wage hike is particularly categorically distributed for employees between C1, C2 and C3 category. This is a category where the employees come between a salary range of 15 to 35 lakhs. So it is something to watch out for going forward. When would company come forward and make an announcement of this?
Thanks, Jasmeet. Now, a massive tax fraud has been uncovered in India involving salaried employees from various sectors, including the armed forces, the police, PSU, schools, and as well as MNCs. The Income Tax Department discovered that these individuals had claimed false deductions and exemptions in their income tax returns, resulting in wrongful refunds. To give us more details into the case, let's go across to my colleague Shrimi Chaudhary.
Yeah, quite a shocking revelation from CBDT coming in, uncovering large-scale tax fraud involving salaried individuals from multiple sectors, including Armed Force, Police Department, PSU, MNCs. And in fact, this emerged after the July 14th verification drive, where the intermediaries who were suspected of facilitating these fraudulent claims in income tax filing were caught. And in fact, they admitted under oath to have filed these kind of returns, faking exemption and allowances in exchange for commission. And this is what the letter assessed by NDTV Profit, where CBDT has now saying that the verification exercise, showing a significant number of salary taxpayer who avail bogus deduction and exemption, often without, supporting documentation. And this is quite prevalent in these sectors. Such claims included, fraudulent entries under various sections of Income Tax Act, such as investment, housing loan, medical expenses and other exempted allowances. Now, CBDT has issued urgent instruction to take up the matter with the respective organization, because we are talking here about, armed forces, police department, most are the PSU's department, and they are taking it up and trying to sanitize the respective employees, the respective offices to, make them understand that this is not how the exemption and allowances in the tax filing could be claimed. And this is also interesting because this is coming ahead of the tax filing deadline. Remember, for salaried individual, the deadline is September 15th, and for businesses subject to audit is October 30th. So this is very important instruction coming, and the verification process is of course the part and of the broader exercise where department has been witnessing such kind of cases where the bogus claims of exemptions and deduction have been widely used and widely misused actually.
And big national story this evening. The death toll in Uttarkashi cloudburst has touched 5 and about 59 people are missing. 190 people have been rescued so far. Uttarakhand's Chief Minister Pushkar Singh Dhami has taken stock of the situation, visiting the flood-hit areas of the district. Efforts are underway to rebuild the structure of the bridge that collapsed in the flood. A temporary road near the village has also been reopened to aid rescue and relief operations, but the weather forecast adds to the concerns. The IMD has issued a warning for very heavy rainfall in both Himachal Pradesh and Uttarakhand from August 10th to 13th. And that's all the time we had on this edition of Profit 360 viewers, but do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the action.
Hello and welcome. You're watching KYC, Know Your Company. I'm Harsh Saita, and today we're going to be talking about Blue Star. Now, there's been, while the numbers weren't entirely impressive at the face of it, they were a bit of a beat versus the consensus, and Q1 was expected to be a softer quarter in any case, given the fact that we've seen the monsoons coming in early, and that has impacted demand for air conditioners. And therefore Blue Star in focus. I'd want to know as to whether they can actually try and recover the lost demand of Q1. Is that a case of demand deferred or demand lost? That's what I'd want to understand. The second piece is with regard to channel inventory. Now, channel inventory and the view on the full FY26 in terms of FY, because if Q1 gets impacted, does that impact the full FY26 numbers, is the second piece I'd want to understand. The third piece is with regard to the key trigger, which is festive season. Going forward, that's possibly the only trigger that we are seeing. Can festive also possibly be a disappointment? Will it likely exceed expectations? Will there be a bit of a demand cover up in the festive season, given that we've lost some demand, is the key piece I'd want to understand. The fourth piece is with regard to market share. They've guided for a 15% market share by FY26. 14% was the number FY25. Can they achieve that? And at the moment, at least in the segment which has been impacted the most, which is room air conditioners, we are seeing them gaining market share despite the fact that the numbers were softer. Now, let me talk about prices, because that will also determine where margins go. So, is there an ability, is there an appetite to raise prices further that we can see? The sixth piece is with regard to backward integration and cost control, because both of those will also impact margins, and therefore the next obvious question will be the margin inch up. They've guided for an inch up in margins. Margins have come off, unfortunately, because the top line has been pressured in Q1. But can it inch up is really the question, and how quickly can it inch up? And I will also have my eye on capex. They are likely to do nearly 1,000 crore of capex over the next 3 years, 300 crore to 400 crore kind of clip. A lot of that will be funded from internal accrual, so no concern there. But is there a change with regard to that stance as well? So you'd want to keep that in mind. But let me quickly also, try and sum up that Blue Star is in 3 major verticals, right? One is, of course, their room air conditioning business. The second business that they majorly do is commercial air conditioning. So room air conditioning is unitary products, commercial air conditioning is the other piece, and then there is electromechanical projects. So all of those is what they focus on as a company. But let me bring in Mahima Vashajani, who covers the company as well as the sector very, very closely. And Mahima, about the company, take it away.
Right, Harsh, thank you for that. It's a very old company. To say the least, it commenced its operation in 1943, even before India got independent. Yeah, independent.
Yes.
So that's the year of commencement of operations. And air conditioning, refrigeration, and MEP solution provider is basically what Blue Star does. It maintains 2 million tons of air condition and refrigeration equipments. So that's the extent to which the overall equipment stands. Plus, Blue Star manufactures air coolers as well as water purifiers, cold storage, as well as specialty products. The company also offers turnkey solutions in MEP projects. That's your mechanical, electrical, and plumbing and firefighting projects. It also has the largest after-sales services as well in terms of where AC stands for the country. So that's also a segment of revenue for them. In terms of where the business segment stands, as you rightly mentioned, electromechanical is the first one, which is largely into central AC, ventilation projects, firefighting projects, as well as your water projects, plumbing, electrical, and railway electrification. In terms of where commercial AC stands, I mean, everybody knows what Blue Star does exactly in terms of where AC stand. Then we have unitary products. That's your AC coolers, air coolers, water purifiers, as well as commercial refrigeration is also a part of their business. And lastly, professional electronics and industrial systems. That majorly includes your specialized technology solutions, turnkey projects, as well as value enhancing services that the company provides.
If we can just pause here for a minute, right? So it's across the value chain, right?
Correct.
One is it does B2B core, which is more for capex intensive projects. Then you have B2B for commercial ACs.
Correct.
This office itself could be one of those potential clients. The third one is unitary products, which is sells to you and me.
Correct.
Which is residential ACs, plus it does water purifiers as well for home, and it does for offices as well, where you have those water stands, which are largely done by something like a Blue Star. And then there is more government or pseudo-government type projects which they take up. So they're across the value chain. Just wanted to kind of put it out there.
Correct. And then also into after sales as well. Once they sold the product to you, after sales is also a big chunk of their revenue.
Yes.
In terms of their overall network also, the key end markets, as Harsh mentioned, it's residential, commercial, industrial, as well as infrastructure based. In terms of manufacturing facilities, it currently has around 7 manufacturing facilities and 4,000 plus channel partners. It's present in 18 plus countries, and there are plans to strengthen their presence in the international markets as well. In terms of the business model, just to give a perspective, what we were mentioning earlier, they're present throughout the supply chain, because from R&D to manufacturing to trading to being an EPC contractor as well as after sales, everything is done by Blue Star. In terms of the revenue breakup quickly, around 95% is from the domestic revenue and around 4.5 to 5% is from exports right now. And segmental revenue, so your electromechanical projects and commercial conditioning system is roughly 45%, unitary products is 51%, and the remaining professional electronics is around that 2.3% mark right now. So that's whole and soul of where Blue Star stands.
Well, yes, and we'll speak with the management. Veer S. Advani, who's the chairman and managing director, he'll be with us in a few minutes. Just one piece that I'd want to add to this. They use raw material, and that the prices of that pressures margins sometimes. So you need to be mindful of that. Copper, aluminium, inverter drives, electronics, all of those components used within the products that they sell is something that you want to keep your eye out on, because pricing of those could pressure the margin numbers as well. And there is commodity price risk there, especially where copper and aluminium are concerned. They're trying to hedge that, but not entirely successful there. Let's look at the 8 key metrics which we will track with regard to a Blue Star. We'll start with income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of that And let me allow Mahima to start with the income statement.
Right, so income statement is a thumbs up for sure. I mean, let's take a look at the 4 metrics that we always consider. Revenue has seen a CAGR of 25% in the past 3 odd years, from a 6,000 crore in FY22 to almost touching 12,000 odd crores in FY25. In terms of the overall EBITDA, the CAGR growth has been 36%, from a 347 odd crores to almost doubling, or more than doubling, to that 880 odd crores. Even in terms of margins, overall margin trajectory, if we take a look at the past 3 or 4 odd years, that's been in the range of 6 to 7%. So that, as Harsh was mentioning earlier, key raw materials that they use is putting pressure on margins. That's why margins have not been able to expand in the past few odd years. Net profit again has grown 4-fold, from 170 odd crores to over 600 odd crores, and a CAGR growth of 52%. So considering all of this, we've given it a thumbs up. In terms of where quarterly performance stands, year on year revenue has seen a growth of around 4 odd percent, EBITDA saw a degrowth of around 16 odd percent, but this quarter was largely also impacted by early monsoons, unseasonal monsoons, and plus 10 or 15 days odd in the quarter were also lost because of geopolitical reasons, the India-Pak war to be specific. Even in terms of margins, they've taken a hit, and net profit has seen a degrowth of around 28 odd percent. So that's, with regards to where the income statements stand, but because from a longer term perspective and a longer term picture looks promising, we've given it a thumbs up.
Well, yes, it does. Q1 FY26 was a tough quarter, and the base quarter was also a stronger one. So those numbers not really impressive due to that. Let me talk about the balance sheet now, and sorry, just the income statement for one little piece. 6,000 crore was the top line in FY22. Now I'm just thinking back. 1943 based company in FY22 has done 6,000 crore of PAT. So it's taken them nearly 80 years to get there, and then thereafter the pickup, it's doubled in the last 3 years.
Correct.
So just trying to explain that the opportunity size which they're tapping into, fairly large, right? So sorry, just wanted to kind of put that out there. Balance sheet, equity 40 odd crore, other equity which is profits and reserves around 3,000 odd crore, book value is roughly 3,065 crore, market cap is 35,000 crore, trades at 12 times book. You're looking at borrowing number which is extremely small, frankly, and it's all short term, 200 odd crore, really not as relevant, and you're looking at a bank balance which stands at around 400 crore. This will be important because they're doing a lot of capex. They're doing 300 odd crore of capex for the next 3 years, likely to be around 1,000 crore of capex cumulatively. So a lot of the EBITDA which comes out of the company, which is roughly around 800 odd crore annually, will go into this, into funding some of the incremental capex that they do. So something to keep in mind. Cash flow, Mahima.
Again, strong set of numbers here, because cash flow from operations has improved quite significantly, from a 243 crore in FY23 to a 688 crore. So nearly, 3 times. In terms of the metrics of cash flow to EBITDA, that has also improved quite significantly, 78% as of March 2025. And in terms of net cash flow position, that has also strengthened year on year and has been at around 63 odd crores in FY25. So a thumbs up here as well.
Yeah, and typically the cash flow is difficult for something like a Blue Star because they add up on inventory at the end of every financial year, because you are at a stage in the season where you will require a large inventory holding, and therefore you will see that build up in inventory every single year, and that's exactly what they are witnessing. We're just cautious because we're starting to see an inch up. I'd want to understand whether this is just normalized operating cash flow to EBITDA. Is that what one should expect, or can there be an improvement on this metric? Because clearly 45 to around 75%, not the kind of number we would expect from the size that Blue Star is. So that's with regard to cash flow. Let me now talk about the return ratios, and very, very impressive where the return ratios are concerned. Just look at the way in which return on capital employed has gone. FY21, I'd discount that to some extent because of COVID and probably the bounce up from COVID. But you look at FY22, 23, 24, 25, very steady trend with regard to ROC, no concerns there. But shareholding, Mahima.
Right, so, fairly well-held company. Promoters have slightly decreased their stake from that 38.8% mark in 2022 to around 36.5%. But FIs have increased their holding from a 12% to 16%. DIS slightly inched up from 22 to 23 odd percent. And public shareholding has slightly come down from the 27% mark to 24% mark. So overall, taking a conservative approach here, we've given it a neutral rating so far.
Yes.
And slight promoter downtick as well.
Yes, no, the promoter downtick was because of a fresh issue of capital. If you remember, they'd done an equity raise to do the to ensure that that they have enough funds available for the capex that they are planning to do. So I may not completely blame promoter ownership, but just the fact that it's sub 40%. We generally look at metrics from a more than 50% standpoint that the promoter holds the company in a far larger fashion, and therefore we've given this a neutral. No particular concern there. You look at street cred. 1 month the stock is down 2%, 6 months down 12%, year to date down 21%, 1 year performance is up 10%, largely not showing too much of exuberance. But you look at the 5-year number, it's up 7 times in the last 5 years, strong outperformance, and therefore thumbs up from a long-term perspective, thumbs maybe down from a short-term perspective, and therefore we've given this a neutral. Valuations, and I'll take valuations and I'll allow Mahima to take up analyst recommendations. You look at the price to earnings currently, FY26 trades at 50 times. Its 5-year average is 64 times. Its competitor Voltas trades at 43 times. And the 5-year average for Voltas is 110 times. So maybe not the best looking picture from a valuation standpoint. It trades at a discount of around 20%, but look at Voltas. It's trading at a far larger discount and at a discount to Blue Star as well. So you want to keep that in mind. Very marginal discount, but nonetheless, that's the valuation picture. Analyst recommendations, Mahima.
Right, so there are 11 buy calls, 10 hold calls, and just 2 sell calls. And not much in terms of where the return potential stands as to where Bloomberg estimates are concerned. So that's with regards to where street coverage stands.
Perfect. Let's quickly stack up all of our ratings and give the final rating on KYC for a Blue Star. That's how it stacks up. And Blue Star gets a healthy 5.5 on it with no thumbs down. That's the one which really stands out for me. Now, let's go across to management. We have Veer S. Advani, Chairman and Managing Director at Blue Star, joining us. Great having you, Mr. Advani. This is Harsh here. Let me start off with Q1. Is Q1 a case of deferred demand? Is that what we're going to see? Are we going to see an impact of that on full year FY26? I wouldn't envy you if I were answering these questions, sir, but do give us that perspective.
Yeah, good. Thank you, Harsh. Thank you, Mahima. First of all, that KYC was excellent. I learned a lot about our company through that. You've done a lot.
Thank you so much. That means a lot.
And largely on the ball, so I appreciate that.
Thank you.
Q1 you're asking about. Yeah, I think that I think you'll agree with me. This is just postponed purchase. It's very clear that an air conditioner is on top of everyone's purchase list. However, it's a big purchase decision, 35,000 rupees plus. And in many cases, it becomes a multi-season decision because not everyone has that kind of purchasing power to just go out and buy it the first time they want it. This is deferred. This is not lost. And we're quite hopeful that there will be strong demand coming back in the second half of the year. And as we go forward, I think long-term outlook for air conditioners is very strong. We expect a CAGR of 20% for the industry, and that stays as it is.
Mr. Advani, in terms of your market share guidance, does that stay intact? Or from what I understand right now that your close competitor has been losing market share slightly. Do you think that that 15% guidance can still further go up?
We just crossed 14% this quarter. So even though the market degrew, I'm happy to report that Blue Star's degrowth was lower than the market. I think when you do channel checks, you'll see that as well. Tertiary sales have also been strong. Even our inventory in the field is lower than our competitors. So many things right, which gives us confidence that we should be able to inch up on market share. We're not changing our guidance of 15%. I think we'll keep it at that because we need to get there first before we set the next target.
Understood, Mr. Advani. What's keeping you on the ball there? Because gaining market share in a tough environment is especially difficult. So what are those levers which you're using to stay ahead?
Yeah, so it is our long-term strategy, which we started 4 years ago. It is investing in the product. So product is the king. We believe that we have the market-leading products available that customers want. We invest in R&D, we invest in our supply chain, we backward integrated. We're building everything in-house, which also, by the way, has allowed us to be flexible on our inventory position in the market. So a lot of investment done, we believe, into the business, both the product as well as the delivery mechanism. And that is what is allowing us to win in the market. I think customers, even though they are first-time buyers, they're looking for value, they're looking for credibility. And I think Blue Star is able to give them that in this category where we've been around for 80 years, as you said.
Mr. Advani, where does pricing stand? Because no matter what, competition is there to stay. What is the common trend that you're observing? Are you able to, slightly increase your prices when it comes to the selling pattern, or do you have to be really cautious when it comes to your price increases?
So you may know we raised prices before the beginning of the financial year, April 1. So that was done, which partially helped us in our EBIT that we delivered. We have not rushed to give discounts and clear inventory because, as I mentioned to you, we don't have as much of an inventory problem. So we've been able to keep steady prices. I think in a tough market like this, that itself is a positive. And we're able to command that kind of price position because I think the channel and customers believe that we are a steady price operator. So I think that comes to our benefit in a tough market like this. We're not as nimble to react to market changes with pricing, and I think that's something that's appreciated by the trade.
Got it, sir. So let me ask you a question which is likely going to be the golden question. Margin inch up. You've spoken about it in the past that you're expecting an inch up in margins. You've not given us timelines, but give us a perspective. Directionally, it should go up, of course. Maybe in the next 3 years, if you were to put a number to this, what would that likely number be?
So you're putting me in a tough position, Harsh. I'll put it to you this way. It's about mix of business and then it's about profitability of each business. What I want to convey is that, segment one is expected to grow at about 15% a year is what we've been talking about. We expect segment two, which is the unitary cooling products business, to grow faster. So if that happens, that the unitary cooling products EBIT margin is higher than our B2B business, and therefore we should see that business mix improvement on an aggregate Blue Star basis. Having said that, it's a hyper competitive industry. And as this category grows, there'll continue to be pricing pressure, and therefore we have to keep working on cost management, which is something that Blue Star does well. So net, difficult to give you a number, but we've been looking to improve our EBIT by at least 100 basis points, over the next few years, and we're confident of delivering that.
That 100 basis points is over 7% or 6%?
So this quarter doesn't count. I think we take full year last year as the number because this is just an anomaly. I take last year and then look at improvement.
Okay. In terms of your channel inventory buildup, because that would have happened this particular quarter because of unseasonal monsoon, in two next odd quarters, that should not be a concern, correct?
Yeah, I'll give you some numbers. We're currently holding about 75 days of inventory between our warehouses and our channel. That should have been 45 days in a normal summer. I'm not talking about a blockbuster summer. In a normal summer, we end the summer with about 45 days of inventory. That's about 75. So there's 30 extra days of inventory, which we are not too worried about. We think it'll get cleared out soon. There's a Bureau of Energy Efficiency table change coming January 1, 2026. And that tends to therefore lead to advanced buying of the existing table typically. So between the inventory that will get cleared out and production that will restart, I think we're comfortable with inventory over the next couple of quarters.
So, sir, if I were to look at Blue Star as an investor, right, you're at roughly 12,000 crore of top line at the end of FY25. Let's keep Q1 out. It's a washout quarter.
Yes.
FY26, 27, 28, 15% top line growth. Is that something that one can reasonably expect you to do?
I think so. That would be our, I think that's doable. We would like to do more. We have ambitious plans internally, which may be higher than that. But I think as an investor looking at Blue Star, 15% CAGR is very reasonable.
Any change in the capex guidance that you've given so far? And this is more likely in the backward integration aspect, correct?
So we have three areas of capex. We have backward integration and capacity expansion, which is in manufacturing. We have R&D capex because we are a heavy R&D user, and then we have our digitalization program. So across those three, we expect to spend around 1,000 to 1,200 crores over the next 3 years in capex, which is what we've been doing over the last 3 years. So it's not a further increase, but it is a step change over sort of pre-COVID that you've been seeing.
Completely out of time on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, if you've been watching NDTV Profit through the day, you will know that Donald Trump, the President of the United States, levied an additional 25% tariff on India. The purpose or the reason behind that was because India is buying Russian crude. That's not something that makes Donald Trump very happy. Now, these tariffs don't come into play immediately. India has 21 days to talk to the US and figure things out. At least that is the interpretation. But then everyone's focused on what the implications could be for the Indian equity markets, for the Indian economy, for Indian companies, and ultimately for you, the Indian investor. So that is a question that we're asking on Your Money Matters today. Joining me is Vijay Mantri, investment expert and someone that you've seen quite often on this program. Vijay, thanks so much for taking the time. How much attention are you paying to this, and do you think that individual investors should worry about this?
So two factors. One is that I was reading the book of Neil Chaudhary, Indian Prime Minister. In that book, there's a reference of Mr. Vajpayee conducting nuclear tests in 98-99. And one of the questions was that will US put sanctions against India? And at that time, Bill Clinton was leading the non-proliferation treaty, and he was the president of the United States. But India went ahead with nuclear tests and those sanctions imposed against India. But very interestingly, at that time, Mr. Yashwant was the finance minister, and Mr. Doval was the NSA. And they came and told PM that we are very comfortable because we have $30 billion of foreign exchange business. That was 98-99. We have a close to $16 billion forex reserve. So, and India is no longer India of 98-99. So that is the one part of the equation. The second part of the equation is: are we looking at selling our real estate? Are we looking at climbing down a business expansion plan? Are we looking at not continuing our investment in insurance or not doing bank FD? Why the entire focus comes on equity market and SIP, where allocation is only 5% of household savings. So there is a one question investors need to ask: why every time you come and look at the equity asset? That is the one part. Third part is that no big money ever made on the part of certainty. And in this market, we believe that it is a great market to start re-looking, continuing your SIP, re-looking more allocation over next 6 to 12 months, because all these uncertainty will disappear. But whenever these kind of situation or challenges come, they look very daunting at that time. If once the event get past, we always regret, past मैंने उस time पैसा डाल दिया होता.
The wisdom of retrospect is flawless. Vijay, to the second point that you make, let me play devil's advocate and argue that the volatility of equity market and prices of shares is significantly higher than the volatility in gold, in real estate, in fixed deposits don't change, and so therefore the tendency, because you are experiencing a loss in that moment, of course it's notional, and if you book it at that moment it becomes real, but the tendency is to feel anxious when you are witnessing that notional loss.
That's why very few people end up making money in the equity. You don't lose money in the gold, you don't lose money in the real estate because of price movement, because your holding period is forever. And patience capital come into these assets really. Unfortunately, patience capital does not come into the equity. When people invest in equity, the expectation is that it is a multi-bagger. The expectation is that it will generate fabulous return. The expectation is that these returns will be linear. Like it will go like FD, it will go at 12 to 15%. And if you come with wrong expectation, and this is the challenge. So if you look at Indian equity market and particularly look at Indian equity mutual fund, which now have more than 30 years track record, fabulous wealth has been created. But I just take one fund's illustration because I track that fund and I work with that fund house in NDTV Flexicap. Now that fund has grown investors' wealth 180 times in last 30 years. But that fund's average NAV fall 10% every 6 months, 20% almost every year, 20% almost every 4 years, and 50% almost every 8 years. If you are coming in equity market and look at the history, but when you look at the history, just don't look at last 1, 3, 5, 10-year return, but also important to look at how this return has arrived, what is the journey. And if this is the kind of money you need to make, then this is the journey you will take, your portfolio will take. There's no other way the wealth in equity will be created.
Okay. At this juncture, given what we know and the kind of uncertainty that's playing out globally, now there are some estimates that suggest, Vijay, that there will be some impact. There will be some impact to economic growth, not to the extent that some people might think, but maybe 30 basis points or 40 basis points. We are still the fastest growing economy in the world, and domestic facing companies, domestic facing businesses are insulated because the Indian economy, let's face it, is more domestic driven than anything else. So would you say that you adjust your investments accordingly just during this period of uncertainty? For example, a pharmaceutical fund that could be impacted by tariffs, if you have an oversized exposure, do you take that into account, or do you say, no, wait, I'm going to take a contrary bet, eventually things will turn around, and when the chips are down, IT for example, when the chips are down, you will invest in that moment so that you get the best price?
So, one of the best sector or thematic investing should be done when the immediate prospects are not looking good and the headline news is all negative. This is what we witnessed in year 2001, 2021 about PSU equity fund, and this is what we witnessed right now we're witnessing in IT consumption. In my opinion, if any investor who have patience, who have like 10 to 20% ability to withdraw some of the volatility, I think value is emerging in healthcare and tech thematic fund. But one need to consult their own asset allocation and decide. So that is the one part. The second part of the equation is that if GDP is going to take a knockoff of maybe 30 basis point or 40 basis point, also remember everything is interlinked. The money is made in the market on the basis of corporate earnings, and corporate earnings dependent on GDP growth. And real estate does also get impacted to that extent. So when your business get impacted, corporate profitability get impacted, and also assume that your real estate portfolio may not deliver kind of return you expected. So everything is actually linked. So I don't think people expectation will be reset based on the new data. So it just is a passing phase in my opinion, and it is a great time to relook some of the sector which are completely ignored or being completely ignored. Continue with your SIP, and if you have a staying power, increase your allocation over the next 6 to 12 months in Indian equity market.
Since COVID-19, Vijay, people have gotten used to the concept of buy the dip. And we saw this early in the year. I saw a few memes on social media. I saw a few social media posts where people are saying buy the dip, but with what? Because they've already deployed everything. And so when the markets fell after that 10%, they could not deploy because they didn't have dry powder. So would you say that in these volatile times where things can flip on the flip of a coin, do you keep some dry powder ready, available for you to deploy in ideas that you like?
Yeah, the question is that is your money in it, which is like, don't you have monthly earning coming in? Don't you have anything else? So how does people buy real estate and continue to buy gold and continue to put money in deposit? So it's a false narrative being built around that. Where is the money to invest in? People have money, and if you look at average cash holding of Indian investor, there's enough money available on the table, and that's why we have this thousands coming in. I would look at investing and always, keep it very simple. Don't complicate things. Next 3 to 5 years of your household expenses, don't keep in debt and debt-oriented products, and don't take any risk on that. Beyond that, start putting money into equity. But whenever you put money into equity, be mindful that your portfolio may go down 10%, 20%, any point of time. In this market, if you ask me, I don't see beyond double-digit kind of dip happening. And the market may test you for next 6 to 12 months, but that is the beauty of equity investing. Alex, in the beginning of 2025, I note that 2025 is going to be year of accumulation. This year will not generate significant results. And I continue to believe that accumulation phase, if you stay through the accumulation phase, then only you see the growth phase. Else you will not see the growth phase.
Yep, you said it. Vijay, thanks so much for joining in. Appreciate the perspective that you brought today. Keep it simple is the message coming through from Vijay Mantri once again. And 2025 is the year of accumulation. Use this opportunity to build up on your portfolio so that you can reap the dividends down the line. The largest scheme category in the actively managed equity mutual fund space is, and I know that a lot of you know this, but I'm going to spell it out. It's a sectoral and thematic category. It wasn't always the case. This is something that changed last year. It used to be the flexi cap category, but the interest that retail investors have in the sectoral and thematic category is such that it has grown to the proportions that it is at right now. And a lot of people get into these concentrated investments thinking that it's going to give them significant alpha. What we're going to try and do is find out whether this has been the case since COVID-19. And joining me now is Kaustubh Belagpurkar, who's Director of Fund Research at Morningstar India. Kaustubh, thanks so much for taking the time. The first question, of course, is how have these schemes done since COVID-19? That's the operative question.
Yeah. Hi, Alex, and thank you so much for having me in this conversation. Very, very interesting, and I think a very timely conversation to have, because like you rightly said, the past couple of years, we've seen an immense amount of interest in sectoral thematic funds. Mind you, obviously, there are various sectors and themes within the space, but, this is the largest, about 15% of the overall open-ended active equity AUM as things stand today. So that's a pretty significant chunk. And this wasn't the case a couple of years back, right? So if you just look at 2024 by itself, you had fresh inflows of about 1.55 lakh crores in sectoral thematic funds, both in existing and new fund offers, which have also been quite a few over the past couple of years. So it's been a gush of investor money that's come in, right? But I think obviously the pertinent question to think about is, what have these funds done and are they suitable for all investors, right? So let's just unpack this, in various segments. So one is obviously, when you just think about it, from the start of 2020, just in the previous period to COVID, the number of sectoral thematic funds that existed at that point of time, as opposed to today, it was much smaller number. So if we just look at the number then, it was about in the ballpark of about 85 funds. And from those 85 funds, if I just purely look at point-to-point returns, right, when we think about how these funds done, from those 85, almost 2/3 of these on a point-to-point performance from 1st January 2020 up until 31st of July 2025, 2/3 of these have outperformed, say, the BSE 500 total return index. So at the face of it, it looks great, right? That, you had a good 2/3 chance of getting a sector or theme right amongst the fund bouquet, and you would have made money obviously over a reasonably long time period, about 5.5 years, in which you've seen several market cycles, including the COVID crash of Feb and March 2020, right? But if you break this down, right, so the funds have done what they've done. Have investors actually made money? I think that's a question that's very important to ponder over, because what we've seen, and this is not just an India phenomenon, investors tend to do a lot of revenue mirror driving when it comes to it, because sectors and themes tend to have extremely lumpy returns, right? So even if I look at this last 5.5 year period, different sectors or themes have come to the fore over that period of time. If I can just break that down, if you think about 2020, 2021, technology was amongst the best performing sectors at that point. Healthcare did really well in 2020 and 24. In the more recent times, you've had the PSU pack, or you've had the cap goods. The infrastructure theme sort of do well over the last couple of years. So sectors and themes come to the fore at different points of time, and investors more often than not find it challenging to get this timing right, because it is hard, right? So I think that is the thing that needs to be kept into context when you think about the success rates over a point-to-point period for sectoral thematic funds.
We'll get into that.
Yeah.
But just to delve a little deeper into this 2/3 number, which is quite substantial. If you actually look at the rolling returns of mid-cap funds, you look at the rolling returns of small-cap funds, and of course this is point-to-point returns, so perhaps the rolling returns will tell you a different story because of the lumpiness of these schemes. But it's not as substantial, right? So the winners in the mid-cap category, in the small-cap category, are not as substantial. Does that tell you something?
So I think obviously when we're comparing here versus broader market, diversified market benchmark, and when you look at mid caps and small caps, you tend to compare it from the context obviously of that particular capitalization benchmark. So yes, you're right that the success rates have probably been lower. But if I were to compare it against a broader benchmark, if you just think that the PSE 500 was your target segment, then also from a similar lens, you would see that small and mid caps, significant proportion would have outperformed intuitively. I don't have the number on hand, but yeah. But I think a very important thing to point here, right? When you even think about 2/3 that have done well. And this is a study they've been doing for many years, where we break down this outperformance of funds on a monthly time series basis, right? You look at which were those best months of performance for a particular fund. And what we found, and this is a staggering number, right? So you're looking at a 67-month period since 1st of Jan. On an average, only 5 months accounted for the entire outperformance of a sector thematic fund versus the broader benchmark. That means if you as an investor were not invested in those 5 months, which is less than even 10% of the time periods, you would have actually underperformed the BSE 500. So it's very, very hard from a timing perspective to get your entry and exit right in sector thematic funds. And the lumpiness comes in from just these 5 great months of returns over a 5.5 year period.
Which is why what you were saying is that you take this with a pinch of salt, because yes, there's been 2/3 of an outperformance, but investors have not made money. And if somebody heard that in isolation, they'd be like, what? Kaustubh, kya bol raha hai? And they would be like, no, that can't be true. But the point is that if your sector benchmark or if your sector fund has dropped 20% in a month, then you'd have had to have the gumption to hold it through that period of tough time, and then ensure that you held while it was going up as well. And you absolutely need to be correct on both counts, right? On the entry and on the exit, more so than any other diversified fund. Do you agree with that?
Oh, absolutely. I think, we all talk about, time in the market versus time in the market. But here, in a sense, for sector thematic funds, if you get the timing wrong, and data has shown us that majority of the investors have actually got their entry wrong into these strategies. I'll just take a classic case of, say, technology. I spoke about 2020, 21. You had, I think, the index run up something in excess of 70% each year, right? So staggering returns in that sort of post-COVID period. But the money that came in all post 21, in 22, 23, when we all know IT has gone through its own challenges. So investors came in looking at, kind of the past returns and said, hey, the sector is doing really well, let me come in. But their experience was actually polar opposite to what the funds. So even if I look at a 5-year print of technology funds, they're actually pretty good CAGRs. But what an average investor in those funds would have made would tell a very, very different story. And I think that is the challenge of getting entry and exit into these sectors. Very, very challenging. I think even the best professional money managers will not try to take binary calls on sectors like, and that's why we think that diversified equity funds are such a huge, huge positive for most investors. You're not taking that binary call in a particular sector or theme, right?
Yeah. So a few of the questions that I've asked you and that you've shared data for will actually elucidate these points further. So Kaustubh, I asked you whether there's a significant deviation between the top performing, the worst performing fund in a particular sector, and some of these become so popular that everybody's got a scheme out, right? Obviously a financial sector fund, a lot of offerings in that, or thematic fund, or a healthcare thematic fund. There are quite a few options to choose from. So has that been something that you've noticed?
Yeah, absolutely, Alex. I think, I wouldn't leave that only to sector funds, but it probably gets a little more exacerbated in sector funds or thematic funds, purely because, it tends to be a little more concentrated. You might have top heavy names. So depending on the way these active managers would weight, some of the benchmark or off benchmark names, you can have significant divergences in, if I just purely looked at, say, the best performing versus, the absolute bottom of the pack, you can have differences over a 5-year period of as significant as even 10, 12% in, several of these sectors. So the experience for investors, even across funds within a sector or theme, can be quite dramatic. And I think that's also kind of underpins the point, not just that it's very, very hard to take exposure, but also how do you take exposure becomes the other question that investors need to think about if they're willing to take that exposure in the first place.
Okay. The other question that I asked was whether passive funds have done better. And for me, I've looked at a few of these sectors, and defense is a prime example where the defense index itself has done significantly better than the actively managed fund.
Yeah, and Alex, this is a very interesting sort of question to look at why this is the case, right? So if you think about some of the more, obviously indices are constructed. There is a mechanism, the way it's constructed, and the passive will look to mirror that. But, your index heavyweights, and especially for sector themes, you will tend to have very, very heavy index, top heavy names. So your top 5 constituents would typically be in excess of anywhere between 50 to 75%, depending on the sector or the theme. Whereas an active manager will tend to take obviously off benchmark bets or not take sizable exposure to, say an index heavyweight, which is say 25, 30% in that index by the virtue of the way it's constructed on, a market capitalization basis, right? So that can lead to 2 outcomes, right? So one is if it's a very narrow sector and theme, if the top 2 names in an index do really well. Like for instance, you spoke about the defense index. Obviously, the heavyweights have done very well over the period of time, and their allocation in the index has only gone up. That's where the actives perhaps struggled because they didn't hold that index name in that much of a proportion. But the same can happen on the contrary if the index heavyweights were to underperform over a period of time, right? But in more broader sectors, when I say broader, that there is an opportunity set that lies outside the index heavyweights. Let's take, for example, technology or healthcare. When you look at some of these, you would see that actually the active managers have added a fair bit of alpha because they could have gone into segments, maybe down the capitalization curve or weighted some of the index names differently. So I think it needs to be looked at from the context of that and not just painting it in an active versus passive debate because it could be very different exposures that you could gain depending on the narrowness or the broad sort of sector theme that comes into play.
So we have a few more minutes to talk about these very important subjects, so we'll have to run through it. The important question, has a SIP approach worked? So a SIP approach in thematic sector funds?
Right. Okay, now I'm going to play a little bit of devil's advocate because obviously we love SIPs, right? Yeah. And it's been the backbone of investor sort of investing. But when I think about a SIP approach with sector thematic funds, while it's probably still the best way to take exposure to sector thematics because we spoke about the lumpy nature, so you avoid the timing risk. But when you look at the SIP returns of sector thematics, because of this lumpiness, and you compare it with some of the well-managed diversified equity funds, you'd actually see that the SIP returns are almost tending towards some of these diversified equity funds, purely because you've had this crazy months of volatility in between, so you'd come at different varying entry points, whereas the diversified equity fund will have a much more balanced approach, and you'll have much more better outcomes from your SIP, even though the point-to-point returns for that sector or theme look much better, say on a 5-year basis, right? So I think that really brings to point that how do you take exposure? And to my mind, like I said, probably most investors are better off just sipping into diversified equity funds, your outcome won't be too different from a sector thematic. You only take exposure to a sector thematic if you really want to express a very specific view where you can get the entry and exit right, because that is very crucial. Right? You need
tactical.
You come in early, and get out, when it's at a high.
Yeah, so tactical allocation. Is there a way to understand whether people have made money in sector thematic funds? You've actually identified investor return. How do you get that, and what does it tell you?
Yeah, so the investor return is a very powerful study which tells you that, what is the return that an average rupee invested in the fund has made, right? Because if a fund, say, for instance, returns 30% over a 5-year period, only the investor who came in on day 1 and stayed at the end of day 5 will make that 30% return. But like I said, investors come at different points of time. They often come after the good time for a fund has already delivered its returns, and they actually get suboptimal returns. So what we saw, and this is again a global phenomena, that investor returns in very narrow sector thematic funds actually is significant. So if you look at some of the popular funds that have done well, and this is data which is slightly dated, which is end of last year, so December 24. But when you see two funds, we looked at a technology fund and infrastructure fund, the investor gap. So the fund, for instance, a technology fund did about close to 30% CAGR over a 5-year period. But the average investor made only 17.8%. So that's a staggering 12% sort of gap between the fund return and the investor return. In fact, in the infrastructure fund, it was almost 17% gap on a 35%. So half the investor returns were lost because investors just made poorly timed entry and exits, and they lost most of the fund returns. So while the fund returns on paper look great, investors haven't had, large part of investors haven't had the same experience in these strategies.
And so the trick, therefore, is to stay invested and also to time your exit as hard as that is to do. Kaustubh, thanks so much for joining me today. Important data points that we've laid out, and hopefully that will help people make the right investment decisions. Thanks so much for taking the time.
Thank you.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for watching. This is NDTV Profit.
अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
Behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
I'm here joined by Dr. Ashutosh Raghuvanshi, who is the MD and CEO of Fortis Healthcare. Dr. Raghuvanshi, welcome to the show and pleasure to have you and congratulations on a good set of numbers. So,
Thank you. Thank you for having me.
Thank you so much. Pleasure to have you. My first question would be, you have seen a strong margin performance when it comes to Q1 FY26. What's your outlook for maintaining or further enhancing, these margins in the coming quarters, especially considering the new O&M agreement that you have signed? Because I remember you talked about, a 2% growth when it comes to EBITDA margin. So your view on that?
Yes, so our performance has continuously improved, and both the volumes as well as the realization have been good. As you pointed out, the RPOB as well as the occupancy saw growth. So these two factors have been main factors to improve our performance. But I think this performance has been consistent for last many quarters and in line with our commentary on this. So we expect this to continue. As far as the O&M of Clinical 700 beds, which we are going to be managing, is going to be accretive. That revenue we will not be taking, but there would be an O&M fee, which would be 3% of their top line. So that would be accretive to our bottom line.
Understood. So on the margin side, so the margins were at 22.6%. Now, any scope of further enhancing these margins when it comes to whole year FY26, or I would say, what is the margin outlook that you have for FY26?
Yes, so we have consistently said that every year we expect 2 to 3% of increase in our EBITDA margin till we reach a level of about 25% or so. So there is a further scope of improvement which we will get, because this year we are also adding about 900 capacity bed, which includes the newly acquired hospital in Jalandhar, which is about 283 beds. And these beds, at least 50% of them will be operationalized within this year. So that will also contribute significantly to both our top line as well as bottom line. But since some of these capacities are going to be new, so we expect that gradually over the next 1 or 2 years, we should reach the figure of 25%.
Understood. Dr. Raghuvanshi, when it comes to RPOB, it grew 10.2% and the occupancy also increased to 69%. Now, what specific initiatives or the patient mix shift contributed to most of the RPOB growth, number one? And what is the target occupancy when it comes to FY26? Because I remember you had a target of 70 to 71% of occupancy. So your outlook when it comes to occupancy and also RPOB?
Yes. So RPOB mainly grew because of the case mix change. And if you would look at the different segment of service lines in our hospitals, oncology has grown much faster than other specialties, though all specialties have grown. But oncology has become the the largest of the service offerings. And that has typically a higher RPOB, and that has led to a case mix change, which is favorable towards increasing the RPOB. So we don't expect the RPOB to increase in the same manner in future, but it will get slightly moderated. However, the occupancy numbers we are targeting, as we had said earlier, above 70%. So hopefully we should achieve that within the next 2 quarters.
Sir, any reason for moderation of RPOB growth?
So because right now we are seeing a case mix change. And we have not done any significant pricing interventions, and we believe that in healthcare, pricing changes is the lever which should be used as a last resort. So we are only basing our RPOB growth on the case mix change. So more complex cases, we are doing more robotic surgeries, we are doing more complex procedures.
Professors, faculties, and my brilliant young friends. It is both a privilege and a responsibility to be here today at IIM Lucknow. A privilege because I am speaking at an institute that represents the finest of among India's intellectual capital. A responsibility because I am not just speaking to students of management. I am speaking to the potential architects of the new India. My dear students, जब मैं आपको देखता हूं तो मुझे संभावना दिखाई देती है, एक विकसित भारत की संभावना। मुझे एक सपना नजर आता है, सर्वश्रेष्ठ भारत का सपना, और मुझे विश्वास महसूस होता है उस भारत पर विश्वास जिसे कोई रोक नहीं सकता। लेकिन ये संभावना, ये सपना और ये विश्वास आज की मुद्रा नहीं है, ये भविष्य का भरोसा है। And it is about this belief in the future that I want to speak to you. My journey has taught me that the future never unfolds as neatly as it appears in our classrooms. The future is messy, uncertain, and often brutal. And this is what you must be prepared to face. I have learned and still continue to learn that the real world is made up of moments that have no precedents. And when these unprecedented moments come, where the data is ambiguous, where the business models break down, and where the road ahead is unmarked, I have come to realize that success is not defined by how well you studied your business cases. It's defined by you being able to make your own story a case study. History is not made by how well we execute existing models. It is made by our courage and leadership to build our new pathways. वक्त की रेत पर चलने से इतिहास नहीं बनते। इतिहास वो बनाते हैं जो अपनी राह खुद तराशते हैं। So I stand before you today not to hand you a map, but to invite you to redraw the map itself, to challenge your very definition of leadership, to urge you to adopt a philosophy that dares to choose conviction over caution, consequence over comfort, creation over conformity, and conscience over convenience. ये सिर्फ नारे नहीं है, ये वो फैसले हैं जो मेरी असली लड़ाइयों, साहसी दावों और बेहद नीची क्षणों से आकार पाए हैं। और अब मैं आपको हर एक फैसले के पीछे की कहानी सुनाऊंगा, वो जो मेरी राह की अग्नि परीक्षा बने और मेरी पहचान गढ़ी। My dear students, looking back, I can tell you that every meaningful journey I have taken has almost always faced moments where my resources ran dry and my support systems failed. Only one thing always remained with me: the burning convictions that my bold dreams were worth the struggle. I have always believed that anything worthwhile achieving will test you. It will strip away your safety nets, challenge your assumptions, and ask you to bet on yourself when no one else will. But then I've also learned that the most extraordinary lives are never built on easy choices. They are built with comfort being surrendered in the search for meaning. असली विकास वो नहीं जो सुविधा में पले, असली विकास वो जो संघर्ष में तपे। Real growth happens not when the path is clear, but when you choose to keep searching and walking, even when the destination seems beyond reach. It is in those moments when passion becomes your guide and purpose becomes your strength that you begin to walk not with certainty but with faith. not because the path is visible, but because the dream is. क्योंकि हर महान निर्माण की नींव रखी जाती है एक ऐसे सपने से जिसे कोई देख नहीं सका और एक ऐसे विश्वास से जिसे कोई समझ नहीं पाया. So let me walk you through some of the very moments in my life. My entrepreneurship journey began at the age of 16 when I left my home in Ahmedabad and moved to Mumbai to work in the diamond trading business. It was my first real exposure to risk, relationships, and the power of global networks. In about 3 years, I was called back to Ahmedabad to help manage my brother's polymer factory. It was here that I first understood the importance of scale, logistics, and end-to-end supply chains. These insights would go on to shape my entire approach to business. Then came a moment of national transformations that put India on a different growth trajectory. As India began to liberalize under Prime Ministers Sri Rajiv Gandhi and Sri Narasimha Rao, I saw a once-in-a-generation's opportunity unfolding in what until then had mostly been a supply-constrained market. I made a massive bet and stepped into a trading business with aim of building India's largest trading house. We did so in a matter of just 3 years, and by 1994, at the age of 32, I had taken the company public. Today, that company is Adani Enterprises. But even with the success in 1994, I had a realization that I did not own any physical assets. And in a country at the start of an infrastructure revolution, it felt to me like an opportunity waiting to be corrected. I therefore decided then that my next step would not be just about trading, it would be about building infrastructures and participating in India's growth story. But when I first announced my intention to build a port, most people thought I had lost my mind. Not just because I had never laid a single brick in my life, but because I chose to build the port in Mundra, one of India's largest marshland in the Kutch region. I still recall that when I presented the idea, some of the bankers laughed and asked, "Mr. Adani, how do you expect us to finance a land that is under the water. And they were not wrong. Mundra had no access, no industries, no precedent. And that is precisely where my first philosophy of conviction over caution came into play. Because my convictions was not about asking the bankers to fund a piece of land. I was asking them to fund a possibility no one had explored. Maps will only take you where someone has already been. But to build something truly new, you do not need a map. You need a compass that points to the possibilities. दिशाएं केवल वहां तक ले जाती है जहां कदमों के निशान पहले से हो, लेकिन दृष्टि वहां ले जाती है जहां किसी की कल्पना भी न पहुंची हो. And my compass of conviction pointed me to Mundra. Today that marshland is India's largest commercial port. And Mundra has gone on to become a nucleus that anchors our network of 21 ports and terminals spread across 17 domestic and 4 international locations. Adani Ports now handles nearly 30% of India's seaborne cargo and also powers India's largest industrial special economic zone, spanning over 40,000 acres of land. Looking back, I can tell you that the first project is always the hardest because it demands not just skill but belief. But once that first impossible dream is brought to life, something shifts. You stop asking, can it be done? And start asking, what else is waiting to be built? जब दुनिया कहे कि यह संभव नहीं है, वहीं से इतिहास रचने की कहानी शुरू होती है. For me, Mundra became the start of the journey that shaped the Adani Group, where complexity was not my challenge, it was my calling. A calling where the extraordinary was not the exceptions, it was the principle. That confidence led me next to Queensland, Australia. Queensland was the manifestations of my second philosophy, consequence over comfort. It was not that India did not have a coal, but India was short of good quality of coal. Hence this project was not born out of ambition for coal. It was born out of a consequence to provide India with a better quality coal It was born out of a consequence to reduce carbon emission as well as to secure India's energy independence. Little did we realize then that the Carmichael coal mine would become one of the most contested energy projects of this century. And this was not even in our own backyard. We are building in Australia, in a country where we had no political capital, no historical presence, and no institutional support. The resistance was relentless. Global environmental lobby groups mounted a massive campaigns against us by organizing protests across continents. International media made us a villain. Banks withdrew financing under their pressures. Insurance companies refused to underwrite us. Activists blocked the roads, filed legal challenges, and even tried to physically disrupt our operations. We were accused in courtrooms, debated in parliaments, and criticized in headlines. Our people on the ground faced harassment. Our permits were delayed. Our railway lines questioned. And our right to even exist on that land was challenged. Everywhere we turned, the message was clear, back up. But we did not. And today, our Carmichael project powers industries with a cleaner coal, support several thousands of livelihood in Australia, and is built on Indo-Australian corridor that is both commercial and strategic. For me, the Carmichael coal mine has never been about being a monument to coal, as we had been accused of. It stands as a monument to our resilience. It stands as a monument to the energy security of our nation. And it stands as a monument to our choice of choosing consequence over comfort. And it is with this resilience that I turn to Khavda, the testimony of my third philosophy of a creation over conformity. If Mundra was a marshy land under saline water, Khavda was a saline water under marshy land. In fact, Khavda is such a desert that I was told that even camels refuse to walk on it. And our initial studies show it to be impossible to build any stable structure on this land, let alone the massive 700-ton wind turbine that we had planned. And yet, we declared that we would build the world's largest single-site renewable energy park spread over 500 square kilometers, generating 30 gigawatt of green power at these very locations. Once again, we were told impossible, unlivable, unbuildable. But we choose not to believe in the limits and instead adapt the desert and create from our own convictions. बंजर वो नहीं जो सूखा है, बंजर वो है जहाँ कोई सपना न बोया हो। दृष्टि है तो वही धरती जो कल निराशा थी आज भविष्य की सबसे बड़ी उम्मीद बन सकती है। Because a Khavda for me was never just about building in the desert. It was about reimagining what the desert could become. And today, I can proudly say that we have already commissioned the first 5 gigawatt of a green power and are well on our way to setting a global benchmark in an energy transition that will see us produce the world's least expensive green electron. Finally, came the hardest project of all, redeveloping the slums of a Dharavi. Dharavi is Asia's largest slum. It is also one of the world's most complex social, economic, and political ecosystems. Every time I flew into Mumbai, the slums below disturbed my conscience because no nation can truly rise when so many of its people live without dignity. Everyone told me Dharavi is too political, it is too risky, it is unmanageable. And that is precisely why I said we must do it. And redeveloping Dharavi is not about laying bricks or yet another slum redevelopment project. It is about rebuilding dignity for those 1 million people who helped build Mumbai but never benefited from it. विकास वही सच्चा है जो मानवता की बुनियाद पर खड़ा हो, नहीं तो वह केवल विस्तार है। मेरे लिए धारावी ईंट और सीमेंट का प्रोजेक्ट नहीं है, यह सुविधा नहीं संवेदनशीलता का प्रोजेक्ट है। यह हमारे राष्ट्र के आत्मा के सामने रखा गया एक आईना है जो हमसे अंतिम प्रश्न पूछता है कि क्या तुम आके फेर लोगे या आगे बढ़कर हमारा साथ दोगे? Will you turn your eyes away or will you step forward and show that you care? All these projects have now become our playbook at Adani, a playbook of our grit, our determinations, our purpose, our attitude and our beliefs. अगर मुंद्रा था प्रकृति का चुनौती देने का सपना और ऑस्ट्रेलिया था दबाव के तूफान में अटल रहने का वचन, अगर खावड़ा था वीराने में जीवन के दीप जलाने का संकल्प, तो धारावी है जहां हमने इंसानियत की आवाज़ को सुना। My dear friends, let me now switch gears and speak about the elephant in the college rooms of today. In this age of artificial intelligence, algorithmic decision making, and global uncertainty, what is the true value of education? Frameworks that you study, like a DCF model, Porter's 5 forces, and a SWOT analysis, have their place in the world of business. But these are built on assumptions, how to minimize risk, but not maximize the future. Because the future will never belong to those who played safe. It belongs to those who maximize possibility. And maximizing possibility means stepping into unknown territory, building before the market signals it's ready, and trusting instinct when the data runs dry. Because that is how the future is shaped, not through predictions, but through courage. Our acts, from the marshland of Mundra to the contested lands of Australia, from the dry salt plains of Kauda to the denied gullies of Dharavi, these are not just a business venture. They are acts of imaginations, of refusing to accept the world as it is and daring to see it as it could be. Business frameworks offer you a canvas, pre-measured, pre-marked, and safe. But India does not need more painters who fill in the blanks. It needs those who can question the canvas itself, those who can paint with colors not yet imagined. And this, right now, is your moment, because India is the canvas that is standing at the edge of something extraordinary. The winds of destiny are on our back, and the lift is coming from four unstoppable forces. First is a demographic. We are the youngest, hungriest, and most ambitious working population on the planet. A billion dreams ready to build. Second, demand. We are racing to become the third largest economy by 2030, not just by consuming, but by creating markets for the world. Third, digital infrastructures. No country has built what we have, like Aadhaar, UPI, and ONDC. These are not just the platforms. These are launchpad for inclusion, innovation, and scale. And fourth, domestic capital. For the first time in our history, Indian money is backing Indian ideas with courage, conviction, and an urgency we have never seen. What I can state with confidence is that your most productive years will coincide with India's most powerful years. Your career and our country will rise together. You will not be looking at a $5 trillion or $10 trillion economy. You will be looking at an India that would be a $25 trillion powerhouse by 2050. The global center of gravity will shift, and it will be towards you, towards India. And while you may have studied from books authored across the world, remember that there is something deeper and something very Indian that no textbook can ever teach you. In a world fractured by a war and torn by the hunger for dominance, India stands tall by its restraint. Where others impose, India uplifts. Where others take, India gives. Quietly, consistently, and with a dignity. No nation can claim this moral high ground with the authenticity of India. And you, the children of our nation, must carry forward this responsibility. Learn from the world, yes, but never let the world define you. You are not just a student of globalizations. You are the children of our civilizations. So here is my call to action. First, choose character over cynicism. The world will generally tell you, don't get involved. Don't care too much. Just look out for yourself. But that is not who you are. When you see something wrong, feel it. And when you feel it, face it. And when you face it, fight it. I did so on Dharavi. Because character is about refusing to stay silent when silence feels safer. Your character is what will be a fundamental to your ability to stand up and fight for your beliefs. Second, choose contribution over convenience. The world will ask you, where can you succeed the most? But ask yourself instead, where am I needed the most? Go where the problems are hard, where the odds are long, where others hesitate, and make your mark there. I did so in Khavda. Because true purpose exists not where the things are easy, but where your effort can create a real change. This is the attitude that will allow you to build what has never been built before. And third, choose courage over comfort. Your talent will open many doors, and therein lies the challenge. The safe job, the high salary, the well-lit path, all of this will be within your reach. But the easy road rarely builds extraordinary lives. It is the bold path, the one filled with risk and resistance, that shapes the leader the world remember. I did so in Australia. So don't just choose what feels secure. Choose what makes you come alive. This is the only way you can look back and have no regrets about the path you walked. And so, in closing, my young friends, let your journey prove that dreams born in Indian soil can shape the world. बहुत से भारतीयों ने विदेश में सपने पूरे किए। अब समय आ गया कि भारत की मिट्टी में जन्म लिए हुए सपने भारत में ही साकार हो। For India, in India, with India. क्योंकि भारत कोई प्रश्न नहीं जिसे तुम्हें हल करना है। भारत वह उत्तर है जिसे तुम्हारे माध्यम से दुनिया तक पहुंचाना है। यह वही उत्तर है जो बुद्ध की करुणा में था, विवेकानंद की वाणी में से जगा और गांधी के सत्य में चला। यह वो भूमि है जहां विचारों ने धर्म का रूप लिया और आत्मा ने राष्ट्र का स्वरूप। भारत एक जीवंत चेतना है और अब ये चेतना तुम्हें पुकार रही है, यह कहकर कि उसे जियो, उसे गढ़ो और उसे गौरव बनाओ। सो व्हेन द वर्ल्ड आस्क वेयर इज द फ्यूचर बीइंग बिल्ट, let your proud answer be here in India. जाओ, निर्माण करो, नेतृत्व करो और गर्जना करो। भारत तुम्हें पुकार रहा है। इंडिया इज कॉलिंग यू। धन्यवाद। थैंक यू। जय हिंद।
भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो,
बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising.
Hello and welcome to NDTV Profit. You're watching IPO and my guest today is Parth Jindal, MD of JSW Cement. Parth, your IPO is coming on 11th. Can you take us through the entire proceeds which you're going to raise? It's the 3,600 crore IPO, and I think the second one in the last couple of years after JSW Infra, which came out with an IPO. How are you going to use the proceeds?
Sure. So the IPO opens on the 7th and closes on the 11th. And like you rightly said, we're raising 3,600 crores. 2,000 crores is an offer for sale where the private equity investors in JSW Cement, Apollo, Synergy Capital as well as State Bank of India would be partially offloading their stake. And the 1,600 crores is getting infused into the business as primary. We've disclosed that about 520 crores of that is going for debt repayment. About 800 crores of that is going towards building our integrated unit in North India at Nagaur in Rajasthan. And the balance is being used for general corporate purposes. So the purpose of this IPO is really to enter the North Indian market as well as to become a pan-India cement player. And this is the first step in our journey from 20 million tons where we are today to 42 million tons, which we would like to get to over the next 3 to 5 years.
Do you see this IPO being also an exit for some of the investors who came in 2021? Because your valuations have more than doubled since the time they came in. I think, if I'm not wrong, 1,600 crores for 19%, and now we are looking at 19,500 crores for the upper band which is there. So is that also one of the reasons?
Yeah, so the upper band is at 20,040 crores, and you're right. They came in at a lower valuation, and they would be partially exiting, but they will still retain about 7% of the company even after the IPO. So yes, every fund has its strategy. So I'm sure they are looking at they are partially exiting, and partially they would remain in the business. And they came in at a very timely time for JSW Cement. That 1,600 crores that they invested in 2021 has really allowed us to expand and become the 20.6 million ton company that we are today. So we'll always remain grateful for their participation, because without the capital that they provided in 2021, we would not be where we are today.
Do you see the environment also very challenging because there's a consolidation happening? Two major players are emerging, and you're also one of them, which has come in the last 10 years. And there's a hyper competition which is now for consolidation as well as for market space. Do you see that as a big challenge for you as you look to get into the northern markets?
No, I think see, there is no doubt that the number 1 and number 2 players are extremely strong. In fact, a bunch of the cement companies are very strong. Whether you look at Ultratech, you look at Adani, you look at Dalmias, you look at Shree Cement, you can look at JK Cement, Ramco, Novoco. Everyone is extremely strong, aggressive. Many of the companies that I mentioned have no debt on their books, and all are expanding. So in this backdrop, yes, it is challenging to be a new player. It is challenging to grow in this market, and it is challenging to take market share. But I think we bring a lot of differentiation to the industry because we are fully backward integrated. The waste product that comes out of the steel making process, the waste product that comes out of the thermal power making process, that is our raw material. So the blast furnace slag or the fly ash, synergies are there with the group. We're also able to leverage the JSW infrastructure, ports and rail facilities to lower our logistics cost. And the JSW Steel sales and marketing and distribution network, because TMT rods and cement are always sold together, and hence we are able to leverage the power of the JSW Group brand and the various synergies that I spoke about. So this gives us a competitive edge over our competition, whether it's in distribution, whether it's in raw material cost, whether it's in manufacturing, setting up new capacities cost. All of our numbers are substantially lower than our industry peers, and hence we are able to expand and grow. So we are very bullish. I am very bullish of the growth path that this company is on. We have been the fastest growing cement company over the last 10 years. And I expect us to continue to remain the fastest growing cement company over the next 10 years.
No, the reason why I was asking this question was, you have strategic advantages with respect to group companies, and that brings in synergies for you. But at the same time, when we saw in FY25, pricing was depressed, volumes were not growing. We saw your cash flow from operations dipping from 1100. Your EBITDA came down from 1100 to roughly around 800 odd 864 crores, which came down. So the sensitivity to the external environment seems to be very high for your cash flow from operations.
Yeah, of course. I think, apples to apples, given what happened in the industry last year, relatively JSW Cement did much better because we have the strength of the group, strength of GGBS. But having said that, we are present in as of now, we are present only in 3 regions: the south, the east, and the west. So if there is heightened competition or heightened volatility in any one of these 3 regions, that impacts JSW Cement. And hence why we are looking at expanding into the north and into the central, so that as a company we are naturally hedged. If the price in one geography is depressed, it won't have a significant impact on our overall performance because the other geographies will do well. And that's what we saw with some of the pan-India players last year. Even though the regional players suffered, some of the pan-India players who had higher presence in the north or central, they did extremely well. And that's why as a company our strategy is to have 2 planks. For the cement side, be a pan-India player and continue to focus on penetration and volume growth of GGBS, where we are the clear market share leader.
And that's also an advantage for you in that sense, because that's a unique product, because you have a market share of 84% odd in that market there. But do you see that can be replicated in the northern markets when you expand from 20 million odd to 41.8? That's a plan over the 3 to 4 years for you. Do you think that you'll be able to replicate the same success there?
Yeah, so GGBS as a product, we will continue to remain focused in the existing geographies only, which is the south, the west, and the east. We have no plans of taking GGBS to the north or to the central part of India because there are no steel plants in these parts of India. So there our strategy will be purely conventional cement strategy, where we will be making fly ash based cement. Whereas we are very bullish on the growth potential of GGBS within the existing geographies itself. So while we are expanding from 20.6 million to 42 million, roughly about 8 million tons of this expansion is dedicated to GGBS, which would be happening in the zones of the west to cater to the MMR region, as well as in the south, where we will be catering to the growth of Andhra Pradesh, Karnataka, Tamil Nadu, Kerala, and Karnataka.
How do you see the entire environment with respect to volume pickup in southern market and the western market, and the pricing? Because both of them saw impact of pricing and volume last year.
I think last year was an aberration. The volume growth was only 1% in our geographies, and a large part of that was due to the general election being there, as well as a series of state elections being there. So the political uncertainty or the time taken for the new government to actually form and establish and restart government infrastructure took a little bit of time, and it's only from December of 2024 that we really saw government infrastructure spending pick up again. This year it's a more stable environment, and the start has been very strong, both as on the volume front as well as on the price front. We saw recovery. Volume growth, in our geographies has been about 4%. Whereas pan-India has been about 5%. I expect all India cement demand to grow at about 6 to 7% this year. Whereas prices have recovered. So the lows of FY25 have gone away, and there's been a
8% odd.
Last year prices dropped nearly 10%. We've seen prices recover.
Fully recovered?
It's fully recovered. It's fully recovered. In some markets, it's gone even above FY24 levels. So we see stability, and I'm very confident with the great monsoons that we've had, that the second half of the year will be even stronger, given good government spending, good focus, as well as great monsoon. So I expect that's why I expect the first half I expect 4% sort of a growth, but I expect all year growth to be around 6 to 7. So about 8 to 9% growth I expect in the second half of the year.
from 20 odd percent, 21 million tons to 41.8, you want to expand over the next 3 to 4 years, and that would need a lot of cash flows and maybe debt on the books as you head towards that. How do you plan to bring in the cash and the debt? Because your leverage is already at 3.2, if I'm not wrong. So how do you plan to do that?
Yeah, if you look at our overall leverage of our 4,200 crores, about 1,500 crores of that is already gone towards our expansion projects. We're getting 1,600 crores by way of this IPO.
Yeah.
So that was going to really help us fuel this expansion. Plus, over the next 3 to 4 years, there are going to be substantial internal accruals that come. So our expansion plans are going to be funded by a mix of internal accruals as well as debt. At the same time, we don't want our net debt to EBITDA post IPO will drop to about 2.57. We want our net debt to our goal as an organization is to keep our net debt in and around 2.5 times over the medium term. So the way we'll be able to manage that is because of the improved internal accruals that we are projecting to generate through these projects.
And the two line items which are there in expenses, one being the fair value impact and the other being the ESOP charges, will that go off from FY26 onwards, and that will improve your EBITDA as well in that sense?
It won't have an impact on our EBITDA, but it'll definitely have an impact on our profitability, on our PAT.
Yeah.
And
because you were loss making in FY25.
Yes, both these charges go away from the time we IPO.
And how do you look at the volume growth? You give me a brief idea about 6 to 8% of volume growth for the industry.
Yep.
Does this IPO also brings in the ability to have more currency in terms of any expansion or of capital that is required going forward?
Yeah, definitely. I think this gives us a lot of flexibility. It allows us to compete for any acquisition if any such opportunity comes. But like I mentioned earlier, the cement industry is filled with very strong players, entrenched and cash-rich players who have stronger balance sheets than JSW Cement has. And as a result, any acquisition fight would be very expensive for JSW Cement. So for the medium term, we are very focused on our organic growth journey, which is to grow from 20.6 million to 42. We are not considering any acquisitions for the medium term.
But the group as a whole is very aggressive in acquisitions, right? And you were saying that I'm focused more on organic. Why is that actually? And you've been very quiet in the inorganic front in the last 2.5 years when there has been a lot of inorganic activities happening in this sector. Why is that actually?
Yeah, I mean, I mentioned the reasons. I think it's difficult to compete for JSW Cement with some of the larger players. While as a group we are very ambitious and we are very aggressive, if you look at the acquisitions that we have made, we've always made it based on the strength of that company's balance sheet. So when JSW Steel acquires something, it's because JSW Steel balance sheet can acquire. Similarly energy, similarly infrastructure. Paint was the first time where we acquired a bigger company with group support.
Yes.
But that was a very big opportunity which we didn't want to lose out on. We tried the same in cement with the Wholesome acquisition when we put in a bid. But that was again not JSW Cement acquiring it, it was the group acquiring it. Now when it is, when I am building this business and I'm on my own, I can always go to the group if some very exciting opportunity comes. But as of now, there's no exciting opportunity in my mind on the anvil.
Because Mr. Sargent Jindal is a very aggressive person from a business and expansion point of view, and we are seeing some of the businesses also taking that outlook. But cement has been very quiet in that sense. That's one of the reasons why. Now, finally, my question is on the valuation part of it. You're coming at this around 20,000 odd crores valuation. How do you put this valuation in perspective for the investors? Because from a top line point of view and the EV by EBITDA multiple, you're coming almost at par or slightly expensive to the existing players which are there, the top tier 4 or 5 players. How do you put that into perspective?
No, I think I wouldn't like to make any comment on that. I think the individual investors, the retail investors and the HNIs as well as the qualified institutional buyers, we have seen a lot of interest in this company, and everyone should make their own decision. What I can say is that we will be working very hard and double time to try and make this company a very big success, like some of the other JSW group companies, and each investor should read our documents and take their own decision.
Do you think there's enough on the table for them to make money on listing? Because you will be listing a day prior to the Independence Day, so will there be enough money on the table for them?
I mean, as the largest shareholder of this business, we are very excited about the future, and that is why in the offer for sale, the family is not giving up even one share, because we believe that this company is a very exciting company to be a part of.
Parth, thank you very much for joining us today on NDTV Profit.
Thank you very much. Thank you.
भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome. Good afternoon. You're watching Market Express and I'm your host Malika Mishra. And let's get straight into the show. Markets shrug off Trump's tariff threats, end the day in the positive territory. HDFC Bank, Eternal, Hero MotoCorp contribute the most to the indices. HUL and M&M amongst the top sectoral loser. Nifty manages to end near day's high. Sectoral action remains mixed. Nifty, Media and IT end as the top sectoral gainers. Bitter day for the Nifty Defense and Realty. US President Donald Trump imposed a 50% tariff on Indian goods, apparels, textiles, diamonds and chemicals face the biggest hit. Knitted apparel exports could see a 63.9% tariff. Textiles and diamonds also face over 50% duties. The tariff effective August 27 targets India's Russian oil imports. Indian exporters brace for a 40 to 50% drop in US shipments. Sending a strong message a day after US President Donald Trump escalates the tariff war against India, Prime Minister Narendra Modi emphasizes that India will never compromise the interests of its farmers and fishermen. The sharpest minds weighed in on US President Donald Trump's 25% tariff, which shook the markets today. Nilesh Shah of Kotak AMC said it is fatal to be America's friend. Markets expect a trade deal as US-India interests align.